travel is amongst one of them, because Dubai International Airport has kind of sustained the damage because of the Iran attack. There's the airport of Abu Dhabi and Kuwait that is also damaged. Thousands of flights across Middle East have been kind of disrupted, cancelled. At least 8 countries shut their skies as the entire conflict has erupted on Saturday. Iran, Israel, Iraq, Jordan, Qatar, Bahrain, Kuwait, as well as UAE all have declared their airspace being closed. Now, Gulf region is primarily the corridor for linking India to the Middle East, Europe, as well as North America. In FY25, the total movement that we saw was 74 million passengers flew from and to India in various cities. Nearly 36 million passengers, that is 49%, were from Middle East nations like UAE, Qatar, Saudi Arabia, Oman, Kuwait, Bahrain, Iran, Iraq. So because of this, we're seeing all of these travel companies under pressure. Tapan, I'll quickly take a view on all of these travel companies, namely Ixigo, there's Yatra, there's Thomas Cook, all of these under pressure as well.
Well, no, we have to wait for the things to get settled down, no, because I think there will be a pain, and I don't know up to what period this war may go on and this conflict may go on. If it goes on for more 1 week or 2 weeks, they'll be affected. Again, there are some insurance issues also, and many passengers have still been halted in many airports. Again, many booking will be cancelled, because normally if this type of thing happen, people will refrain their travel for the next few months also. So yes, I think one should stay away from all this stock. They will be in a pressure. Again, we have to see what type of profitability hit will be there, and then in this quarter will be coming. So there are many questions will be raised for all these companies. So I know some of the companies has ran up a lot. So I think better to stay away and wait for the clarity. And again, unless this conflict gets settled down, I think one should not get into it, because many of these companies are having an international tours, and they're almost having a good chunk of their profitability also.
Okay, all right. So that's the view coming in on travel companies. But Bharti Airtel is on the counter that is in focus on the back of its analyst meet, and Somit is here to give us the key takeaway. Somit.
So yes, Sunil, Bharti Airtel in fact did this closure meet with analysts, and they said that they will progressively increase their dividend payout going forward, and they'll continue to invest in their core segment, that is broadband, mobility and the enterprise segment. When it comes to investment in data center, they said that the initial plan will be to expand to 1 gigawatt, and beyond that they will take a call at that point of time. But they clearly clarified that data center investment will not be in GPUs, it will just be on building the core infrastructure. The 20,000 crore investment that they're doing when it comes to the financial service building will be sufficient to scale up the business till one point of time, is what the management said, and their initial target will be to reach around 100 million subscribers, and the first year capital outlay is likely to be around 10 to 15%, which will gradually increase going forward. When it comes to expansion into other markets, they say that they're looking to expand into African market and global market in general, and their aim will be to acquire strategic stake to run the business and not any financial stake as of now. When it comes to Bharti Enterprise stake in Africa at 16%, it will be transferred to Bharti Airtel, is what the chairman said, but they have not given any timelines on that front. When it comes to the promoter stake sale in Bharti Airtel, the promoter will offload close to 8 to 8.5% stake. Again, no timelines given. They have said that this will happen over the medium term, which at least means that nothing on the near term is expected to happen when it comes to the stake sale from the promoter side. On the ARPU, the medium term target now is 300, and their aim is now reached to 350. They aim to take the ARPU number to close to 350 going forward. And lastly, on Vodafone Idea, this could be the reason why the stock is also down nearly 4% odd in trade. They said that for Vodafone Idea, it will be difficult to gain market share, and this is because the position of the incumbents, that is the other players, that is Bharti Airtel and Jio, is quite strong, and sector growth itself is just at around 8 to 9% currently.
All right, Swami, thank you so much for getting us those details. A lot of key takeaways coming in from the Bharti Airtel analyst meet with regards to ARPU, competition, as well as how the stake sale will happen. Tapan, your quick view on this one?
Yeah, Bharti is in a very, very good position. As Somit already told us, the tariff may go up to 300 rupees, which is one of the highest among the telecom. And they have already done a very good 5G investment, and now they are going to reap benefits about that. Also, the 15 to 18% EBITDA will be there. 5G monetization, I think, will accelerate over the time. And if you see, the ROC is also improving around 18% and out. So all these things are good. And again, the commentary of the management is also good. So, but as around 1880 something, the stock is fully priced. I think maybe if you are getting 5% below any deep coming, I think one can buy in a SIP manner for the long term.
That's with regards to where telecom companies go. One quick follow-up I want to take, Tapan, with regards to Bharti Airtel. The management made a comment when it comes to Vodafone Idea, citing that it's going to be impossible for Vodafone Idea to garner market share in a market which is only growing at around 8 to 9%. And I think that's one of the reasons why you're seeing that downward pressure that's coming in on a Vodafone Idea. If you pull up that stock on the screens, you'll see pressure versus a Bharti Airtel, which is trading absolutely flat. A quick view when it comes to Vodafone Idea?
Well, even I think so that no, Vodafone Idea is not going to gain customers from here. No, they are going to lose customer as such. And if you see, they already have a 2 lakh crore liability. Again, no, if you see that EBITDA loss is more than their revenue, and all this stuff is not helping Vodafone Idea, even though government may came to rescue them, but I think they are on ventilator. Honestly, that is what I feel always. I think one should stay away from this stock. Even it is just because of government, this company is there. Otherwise, if they lose customer and if they are not going to increase the revenue, how they are going to pay off all the debts they have? So that is a bigger issue. So that's why my stance is to avoid Vodafone Idea.
Okay, so that's with regards to Vodafone Idea as well. But moving on, we're talking about aviation disruptions as well. They've been deepening amid West Asian tensions. Indigo has actually cancelled 162 flights, suspending all services to and fro from the region till noon, including London, Heathrow, Istanbul and Manchester. Akasa Air has also extended its Middle East suspension. Let me first get in my colleague Danish for more. Danish, what are you picking up? Because it's a double whammy when it comes to aviation companies. One, flights are being cancelled, so there is a revenue loss that comes in over there. And secondly, with the surge in terms of crude prices impacting jet fuel prices, they're going to see escalation in terms of costs as well. What are you picking up?
Well, that's correct. We are seeing that the entire global aviation industry is impacted because of the airspace closure over key parts of the Middle East as well as certain other areas. So because of this, like you very rightly mentioned, that it is a big double whammy for the Indian Airlines, not only for the global airlines, but if we talk about the Indian Airlines specifically, on 1st March, we saw that in fact the ATF prices have also been increased by 5,000 rupees per kiloliter on an average. So much before the overall impact of the crude as a whole, we are seeing that already the ATF prices have started to go up. But as far as diversions are concerned, over the past 2-3 days, Indian Airlines have cancelled over 1,000 flights. And if we talk about a specific few airlines, for example, Indigo has not only cancelled its operations to and from the Middle East, but also on select key European routes like London and Istanbul. Similarly, Air India is also cancelling certain key European routes as well. So one of the reasons why this is being cancelled is the fact that because of the whole Russia-Ukraine crisis, already the airlines were using another route to go towards Europe, but even that is impacted because of the entire Middle East tensions that we are seeing. So due to this, we are seeing that it is a very huge impact for the airlines. And as far as passenger facilitation is concerned, airlines are doing whatever the best they can. They're trying to accommodate passengers in hotels, but it is a big impact for the Indian Airlines, because if we talk about India, Indigo and Air India, these two airlines have big, deep aspirations to become global carriers, but their global expansion is happening at that point in time when there is a lot of airspace closure. And let's not forget that the airspace closure between India and Pakistan is also there. So because of that, it is a huge challenge for the Indian Airlines. Over the next few days, it is expected that the flight cancellations are expected to continue. So it's a big problem for the entire global aviation industry.
Issues there. Tapan, any view when it comes to aviation companies? Would you advise to book profits now if someone is already there in it? Because if you see the YTD charts as well, I don't think so anyone's really made any money in terms of SpiceJet or Indigo. 12 months, again, pretty flat. Where they started off last February, that's where they are. And likewise, this year, 10.5% is the kind of downtick that's coming on this one as well.
Yeah, I do agree with you. If you see double blow is there, as you told already. And no, even though I was not earlier also bullish on aviation industry and also on Indigo after that fiasco what happened earlier. But here now again, because of this crisis, because of this conflict, now what will happen? We don't know up to what period this will go on. 1 week, 2 week. I don't think it will end soon. And as already the Russia-Ukraine route is closed now. If this route is closed, many of the airlines have to cancel their flight and all that. So again, there will be a margin pressure. Again, because of currency volatility, forex issues will be there. Again, airport charges also we have to see, because flights will be stuck at many airports, and we have to see that also. So lot many things are there to be seen. And for aviation industry, it is a double blow. So I think better to stay away. And yes, if someone is having a profit, better to get out from these aviation companies, whether it's SpiceJet or Indigo. I think things are not looking so great, at least for 2-3 quarters more.
Mahindra Group has decided to kind of rationalize its portfolio, the group portfolio as a whole, and Danish is here to give us more perspective on this development. Danish, over to you.
Well, that's correct. Mahindra has announced that it will be exiting from the Mitsubishi Mahindra Agri Machinery, and this was a JV which was set up almost 11 years back. It was formed in 2015, and Mahindra holds a 33% stake in this particular company. But company sources are telling NDTV Profit that the company has decided to cease operations in a controlled way from the first half of FY27, and the customers will not be impacted. Whatever warranty and the other customers are there, they will be providing those warranties, they will be providing those replacements till the warranty period is there. But one of the reasons why the company has decided to exit from this particular JV is the fact that this was not viable from a very long time, and this was initially set up in order to cater to the Japanese market and the nearby areas. But over the past few years, the competition had suddenly gone up, and the demand production pattern and the demand expectation was also very different. So looking at all these factors, the company has decided that it will cease operations, and it will be happening in a very systematic way, and they have targeted to cease operations from the first half of FY27. But if we look at the overall farming angle for Mahindra, it is one of the strong plays for the company, and in order to ensure that the overall business is not impacted and the value keeps on going up, so that is why the company has taken this decision to exit from this particular joint venture, and it will happen in the first half of FY27.
Danish, thank you so much for getting us those details. Of course, stock slightly under pressure, down by about 1.9%. But with that, we're completely out of time on this edition of Trending Stocks. Tapan, thank you so much for taking out the time. From here on my side, thank you so much for watching. Stay tuned to NDTV Profit for more news and updates.
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक concept नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outs.
One year at the helm of Sebi and Shri Tuhinkata Pandey has enacted changes that a lot of street would have been hoping for or waiting for, and I'm sure there are many more in the offing. So here we are at Team NDTV Profit at the Sebi headquarters, talking to the man himself about how does he think of the year gone by and what does he think of what's going to come in store. With me, Neeraj Shah and Shrimi Chaudhary, the man himself in the hot seat. Sir, thank you so much for being with us today.
इसी उद्देश्य से आज हमने इंडिया कनाडा डिफेंस डायलॉग की स्थापना करने का निर्णय लिया है। फ्रेंड्स, पीपल टू पीपल टाइज हमारे संबंधों की असली ताकत है। आज हमने इन्हें और मजबूत करने के लिए कई महत्वपूर्ण निर्णय लिए हैं। एआई, हेल्थ केयर, एग्रीकल्चर और इनोवेशन में आज कई यूनिवर्सिटीज के बीच नई पार्टनरशिप की घोषणा हो रही है। हम कनाडा की यूनिवर्सिटी द्वारा भारत में कैंपस खोलने पर भी सहमत हुए। इंडिजिनस और ट्राइबल कम्युनिटीज हमारी साझा सांस्कृतिक विरासत का महत्वपूर्ण हिस्सा है। सांस्कृतिक आदान प्रदान बढ़ाने के लिए दोनों पक्षों के बीच आज एमओयू किया गया है। फ्रेंड्स, भारत के लिए कनाडा इंडो पैसिफिक में महत्वपूर्ण साझेदार है। इंडियन ओशन रिम एसोसिएशन में डायलॉग पार्टनर बनने में उनकी रुचि का हम स्वागत करते हैं। इससे हमारे मैरीटाइम सहयोग को नई गहराई मिलेगी। हम सहमत है कि टेररिज्म, एक्सट्रीमिज्म और रेडिकलाइजेशन दोनों देशों के लिए ही नहीं, पूरी मानवता के लिए साझा और गंभीर चुनौतियां हैं। इनके विरुद्ध हमारा करीबी सहयोग वैश्विक शांति और स्थिरता के लिए अत्यंत महत्वपूर्ण है। विश्व में चल रहे अनेक तनावों को लेकर भारत की सोच स्पष्ट ही है। हमने सदैव शांति और स्थिरता बनाए रखने का आह्वान किया है, और जब दो लोकतंत्र साथ खड़े होते हैं तो शांति की आवाज और भी सशक्त हो जाती है। पश्चिम एशिया की वर्तमान स्थिति हमारे लिए गहरी चिंता का विषय है। भारत डायलॉग और डिप्लोमेसी के माध्यम से सभी विवादों का समाधान का समर्थन करता है। इस क्षेत्र में मौजूद सभी भारतीय नागरिकों की सुरक्षा के लिए हम सभी देशों के साथ मिलकर काम करते रहेंगे। एक्सेलेंसी, आपकी यात्रा से हमारे सहयोग के हर क्षेत्र को एक नई ताकत मिली है। भारत के प्रति आपकी गहरी प्रतिबद्धता और दूरदर्शिता के लिए मैं एक बार फिर आपका हार्दिक अभिनंदन करता हूं। बहुत बहुत धन्यवाद।
Thank you, sir. May I now request the Right Honourable Mr. Mark Conry, Prime Minister of Canada, to give his remarks to the media.
Thank you very much. I will make my remarks in English and in French. And may I begin by thanking you, Prime Minister Modi, for the generous hospitality that you have extended us here in New Delhi. You've extended my ministers as they've visited, and the spirit of partnership with which you've approached our relationship since we first spoke in my capacity as Prime Minister last June. And as you mentioned, a few weeks later, you made time to come to the G7 summit in Alberta, Canada. 5 months after that, we met in Johannesburg at the G20. And now, today, the first bilateral visit of a Canadian Prime Minister here in 8 years. In the intervening months, our foreign ministers have been busy. They've met 5 times. 4 of my ministers have led delegations here to India. Provincial premiers have been here, including today. There has been more engagement between the Canadian and Indian governments in the last year than there has been in more than 2 decades combined. So, this is not merely the renewal of a relationship. It is the expansion of a valued partnership with new ambition, focus, and foresight, a partnership between 2 confident countries charting our own course for the future. In the last decade, let's just reflect on what's happened. In the last decade, under your leadership, Prime Minister, India has become the fastest growing economy in the world. Per capita incomes in this country have risen at a pace never seen in history. Seldom in human history. The most ambitious projects in clean energy, in the digital economy, in biofuels, in the next generation of artificial intelligence talent are all here in India. Prime Minister, Canada shares such ambition and your sense of purpose. Comme l'Inde, le Canada voit un monde en profonde transformation. Comme l'Inde, nous savons que les certitudes qui ont structuré le commerce, la sécurité, la finance et la diplomatie pendant plus d'une génération ont été renversées. Et comme l'Inde, nous reconnaissons que le système multilatéral sur lequel nos 2 pays ont longtemps compté est mal adapté aux défis de notre temps. We both know that nostalgia is not a strategy, and that those who succeed in this new era will be those with the confidence, the ambition, and most importantly, the partnerships to build a more inclusive, sustainable, and prosperous future for all our citizens. And I believe the prescription for success in this new era is well exemplified by the theme of your G20 presidency in 2023, which I had the honor of attending. That theme, of course, one Earth, one family, one future. Because the challenges of our age cannot be solved by one country alone. And only by building on the principles of one Earth, one family, one future can we forge the partnership worthy of our countries. Reconnaissons que nous partageons une seule terre. Nous renforçons notre collaboration en matière de climat et d'environnement. Le Canada prévoit de doubler son réseau électrique d'ici 2050 et d'accroître considérablement le déploiement des énergies renouvelables et du stockage de l'énergie. De son côté, l'Inde est une chef de file mondiale dans le domaine de l'énergie solaire à grande échelle. Les technologies de stockage d'énergie et d'autres formes d'énergie renouvelable. C'est pourquoi le Canada et l'Inde tiendront cette année un sommet sur les énergies renouvelables réunissant l'industrie, les investisseurs et les décideurs publics afin d'élargir et de diversifier le commerce des technologies propres. Et nous bâtissons, à partir de maintenant, un partenariat énergétique pour un avenir plus durable. India is a country whose demand growth for energy is projected to double by 2040. And to meet that demand sustainably, India plans to increase its renewable capacity by 500 gigawatts by the end of this decade, and to almost double the share of LNG in its primary energy mix over the same period. Canada is well positioned to contribute as a reliable supplier of the world's lowest carbon, responsibly produced LNG from our west coast. As India seeks access to critical minerals for its manufacturing, its clean tech, and its nuclear plans, Canada's resource base and world-leading companies position it as a strategic partner. As one example, the nuclear agreement, the uranium agreement signed today. As another, the fact that 40% of the world's mining companies are listed in Canada. Today, we are launching a strategic energy partnership with significant potential to expand bilateral energy trade. We've signed, as you've seen, a new critical minerals partnership spanning development, processing, and secure supply chains for clean energy, electric vehicles, and advanced manufacturing. We're deepening our cooperation in clean energy, expanding collaboration across wind, solar, and hydrogen. Because Canada has big plans as well. We plan to double our grid by 2050, and India can be a major partner in this expansion. As you've seen, the government of India and Cameco have signed a major $2.6 billion uranium supply agreement supporting India's nuclear ambitions and our shared commitment to clean, reliable baseload power. All of these agreements, under one planet, are beginning of a new prosperous relationship that will offer generational opportunities for workers and businesses in both our countries, and which will protect the planet for future generations. Secondly, we are one family. The greatest, most enduring strengths between Canada and India are the families who call our nations home. Nearly 2 million Canadians trace their roots to India, including leaders in business, science, culture, and government. Tens of thousands of people travel between our countries every year to visit friends and family. 400,000 talented Indians study in Canada. That is twice the number in the United States. It is 4 times the number in the United Kingdom. These students, these connections, deepen our ties. And so we're collaborating to build on those strengths. We've launched the new Canada-India Talent and Innovation Strategy with 13 new partnerships to deepen our ties in education. And this includes collaborations involving McGill, the University of Toronto, University of British Columbia, to work across artificial intelligence, health sciences, and digital architecture. Notre partenariat va propulser des centaines de chercheurs canadiens et indiens grâce à des projets de recherche conjoints de pointe. Nous lançons de nouvelles bourses et de nouveaux programmes de fellowship pour l'Indo-Pacifique afin d'accroître la mobilité universitaire et de former la prochaine génération de talents. Over the longer horizon, the Prime Minister mentioned a moment ago the $100 billion of investments already in India by our pension funds. Those pension funds have $2 trillion in capital. They're already some of the largest foreign investors here. Potential for significant growth, particularly given the scale of the infrastructure build in this country. And thirdly, we share one future. That's why we're forging deeper ties in frontier technologies from AI to space. At the G20, India and Canada signed a landmark trilateral partnership with with Australia on AI.
1 year at the helm of Sebi, and Shri Tuhin Katapande has enacted changes that a lot of street would have been hoping for or waiting for, and I'm sure there are many more in the offing. So here we are at Team NDTV Profit at the Sebi headquarters, talking to the man himself about how does he think of the year gone by and what does he think of what's going to come in store. With me, Neeraj Shah and Shrimi Chaudhary, the man himself in the hot seat. Sir, thank you so much for being with us today. Now, when you took over, sir, I would presume that the docket for change was fairly loaded, and you've enacted a bevy of changes. If I were to ask you to think of how would you rate your tenure on the first 1 year, what would you say? 1 or 2 things that have been landmark for you, and 1 or 2 things that you, on hindsight, you might think maybe you could have done it differently.
Okay, I think first of all, it'll be difficult for me to self-analyze, except to say that the year was quite a difficult one in terms of the challenges that it offered. Normally the markets do require a certain amount of stability of policy. Of course, markets are also used to all kinds of uncertainties as well. But particularly the year gone was particularly beset with huge amount of uncertainty arising out of geopolitical developments, not only the wars and crises, but also tariffs in particularly, which were actually impacting a big deal, vast segment of Indian economy, Indian capital. On top of it, we of course had, as I said, that this challenge of a perception that we are over-regulating, and therefore we also had to really clearly put together a collective strategy of, optimum regulation based on, as I said on the first day, 4 T's, which is transparency, trust, and technology and teamwork. These were certainly enablers to achieve this optimum regulation. And all that I can say is that the teams, that is internally, that Sebi, that we have, and also the teams outside, which is the committees and the market participants and the industry and the investors associations and the proxy advisors, all of them have actually helped to put together a series of reforms, which I can call it, while we had one of the best primary markets in 2025 as number 1 in the world in terms of IPO, we also have year of reform in terms of regulations and simplicity and ease of doing business.
Just an extension or a related question, actually, wanted to ask that there is a perception that under your leadership, Sebi has taken a facilitative approach, of course, ease of doing business, clearing files faster, but critics, arguing that this may kind of build a latent risk. How do you want to respond to that?
So I think ease of doing business is not equal to more risk. This is a myth. Actually, the risk is the risk. Risk is to be measured in, the way risk is measured. Ease of doing business is where you are trying to achieve the same thing with less friction. So you are not really, reducing the goal. You are only saying that your goal can be very well done by a simpler way. If I may ask you a question, like if you have something overlapping regulations, more intensive, more micro regulations, how does it help risk management? Because you may be only thinking that you are managing risk, but you possibly could be creating more risks. True. Because if you are micromanaging many things, you are not perhaps paying your attention to the more riskier things in hand because you are busy micromanaging.
That's true. Sir, okay, let's try and focus on specifics. One of the things that always comes across when any average business journalist speak to the FinMin, to RBI or to Sebi would be, how is it that we can facilitate ease of investments by the foreign institution community? Because the big talking point of 2025 was that while EM saw a lot of fund flows in, India did not. Now, valuations may have been one of the reasons, but a lot of questions come about. I mean, this whole limit being taken from 25,000 to 50,000, some of the FPIs that we spoke to did say that it is maybe a bit onerous. Taxation may not be under your purview, but this certainly might be. And a lot of other factors. What is it that you reckon, sir, that Sebi can do and you would want to do in order to ease the processes for foreign portfolio investors?
So, one, we should avoid linking the FPI outflows to merely saying that what are the XYZ measures that they face, because the outflows are contingent on several factors.
Agreed.
And even if sometimes the conditions and processes are very tough or very cumbersome, but if a lot of money is to be made, people will still come in there, right? So I am only looking at the structural factors, where whether or not what is the current FPI position is, we should be easing business. And when we say easing business, it's easing businesses everyone without diluting risk. For example, if you are taking too much of a time for registration, you are not doing particularly very much due diligence because you are taking time. Because documents would be the same, the examination will be the same. The process itself may be problematic. Suppose you were to wait for wet signatures and apostille documents and so on and so forth, and then wait for a postal delivery. And on the other hand, you can have a digitized registration, digital signatures, which will actually instantaneously deposit all those documents. Now, what has changed? The time is changed, this thing is changed, but the risk remains the same. So therefore, registration as a process where we look at it should be easier, and that we started looking at very closely and made enormous progress working with the FPIs themselves. Then the second one is there were certain other key structural constraints which they have been facing and for many years. Like, for example, the block deal framework, where block deals were not really, framework was not so favorable in order to actually buy on a particular level. So that was facilitated after due consultations, of course. And the third was the closing auction mechanism. And there again, a structure is in place because this issue has been on works for a long time. And at some point, we had to reconcile between how the domestics feel and how the FPIs feel, and bring about a more, reconciled approach and working out a mechanism which actually was required. The fourth is on the FPI netting. This is a consultation paper. This is something which they have been again asking, why should I be asked to, do it on a gross basis when I have a certain, I'm doing buying, I'm selling, and there's a money that I am going to get, and there's a money I have to pay. So can I do it on the net basis, which is actually like save you on cost. Your capital is more efficiently utilized. These are the kind of things that we are looking at now in the consultation paper, and very soon will you get to it. So the registration and the structural processes, and the fact that we also gave clarity on the T+1 settlement, that T+0 is not something that we are looking at, are kind of measures which actually gives a medium to long term certainty on how the things are going forward.
So you are going to keep the T+1 settlement going forward also. There is no rethinking on T+0 is what you are saying. Also, just a small clarity needed, as you said, that consultation paper in the works for more measures for the FPI, especially when we see the additional mandatory disclosure requirement increased to 50,000 crore from earlier 25,000 crore. Some more measures are coming, in your regulation of that sort?
That is again an ease of doing business, because, the 25,000 crore limit was getting onerous for them. And so therefore we had to give a higher limit. Certainly we should be really looking at, in fact, I forgot to mention our initiative on Swagat FIs. And two more things. Swagat FIs is one where we say that long-only funds, sovereign funds, and retail funds with a widely, like UCITS and others, which are well regulated, insurance funds, pension funds, these can be given a Swagat status where we have a much better much elbow room for them to operate, longer license, the single license they can operate, and much less requirements. This has also been put in place. And then we have also better facilities for those which are exclusively dealing with government securities, and so on.
So you also recently talked about reviewing the portfolio management regulation. What's the thought behind that?
The thought is that whenever we have regulations which are there for 5 years or 10 years, and we are looking at it, after the experience, what are the difficulties which have cropped up, or whether some things can be made simpler, or some of the other newer areas have come in which can also be put it at. For example, there is a demat issue, like if you have portfolios, when you have a portfolio transfer from X to Y, you can actually transfer the portfolio, but you have to open another demat account. So then it will amount to actually squaring off your position and then buying another set of positions. So if we say that on the demat account we have change of power of attorney, because the securities in any case belong to the investor. The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक concept नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Good afternoon. You're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volume action. Firstly, let's look at what's on the show today. Firstly, we'll be speaking with the management of Krishna Defence and Allied Industries. The company recently migrated to the NSE main board. The order book stands at close to 142 crore, and given the geopolitical scenario that we are seeing currently, what could be the growth prospect going forward is something that we'll discuss with the management on the show today. Secondly, sticking with the geopolitical issue, a lot of companies are gaining in trade like Deep Industries, Jindal Drilling, HOEC, Antelope Solar, and this is largely on the back of the fact that crude prices have increased, and this in turn could be beneficiary for these companies. So how is it beneficiary? How will it benefit these companies is something that we'll discuss on the show. Apart from that, a lot of travel companies or travel ancillary companies like Yatra, Exigo, Ease My Trip, Thomas Cook, RateGain are down in trade. What is the reason behind this? Obviously, airspace closure is one of the reasons, but why this number is big is something that we'll discuss on the show. When it comes to Fino Payment Bank, that stock is seeing strong volume action after the overnight news that has come in. Over the weekend, the news that came in related to the MD and CEO was arrested under GST evasion case. Varsha will be giving us a detailed outline of what has happened so far and what the management said on the conference call. And lastly, Idea Forge is one counter that's gaining in trade. Volumes are nearly 10 times. Stock was up nearly 11%. What could be the potential reason behind this is also something that we'll discuss on the show. Now, if you look at the market, the Nifty was down nearly 500 points in trade. It's trading way below its 50, 100 and 200 DMA, trying to find some support around the 24,650, 24,700 level. Currently, it's below the 24,700 level, which was one of the crucial marks. Now, it might find support around the budget day low of 24,571. When it comes to sectoral indices, Nifty Pharma and Nifty Metal are the only two indices which have declined less than 1%, though they're down in trade, but less than 1%. Nifty Index, Defense Index is also down in trade, but again less than 1%. But when you look at Nifty Auto, Nifty Consumer Durable, Nifty Intra, all these indices have declined more than 3%. In fact, even if you look at the Nifty Small Cap Index, there also the losses are close to around 3%. But what are the stocks that have been buzzing when it comes to the small cap space, Varsha?
Well, overall, if you see the sector is down, no doubt about that, mirroring a benchmark. But let's see which are the stocks which are gaining in this market. You have Bharti India, wherein the stock is gaining. This is, of course, the volume. If you see, the volume stands at around 2x of its 30-day average. You have Stallion India, Fluorochemicals. Also, the stock is up almost 5%, if I'm not wrong, in trade today. There you go. Actually, it's down. It has come off, so it's down almost 2%. Where Idea Forge, Jindal Drilling, Deep Industries, these are the stock which are in focus, as oil drillers are in focus on the back of Iran-Israel war. While on the loser side, though, you have Dish TV, you have Sajal Glass and Vishnu Chemicals, which are under pressure. This is, of course, on the back of volumes and overall the sentiment that we are seeing into the small cap. So the Vishnu Chemical is down almost 3%. Sajal Glass and Dish TV are also under pressure. So overall, Summit not interesting as such is happening when it comes to small cap sector, though if you see the losses have come up, but still the sector is in pain.
Well, thank you, Varsha, for that extensive small cap market check. Moving on to our first management on the show, Ankur Shah, the Managing Director of Krishna Defence and Allied Industries. Firstly, to start off with, sir, in the third quarter, we have seen a huge improvement in your PAT margin. Is this number sustainable even going forward?
Yes, surely the number is sustainable, but this is just, we're a defense company. To categorize us as a quarter-to-quarter base might not be the true picture that is there. You have to look at it from a longer-term perspective because we have long-term working capital cycles. But the product mix is improving. We are trying to get on high-value products that is there. So we see this growth continuing and continue to go forward.
Hello, Mr. Shah. This is Varsha this side. Well, the order book is standing at around 143 odd crore. Now, my first question related to order book is, what are the timelines when it comes to this order?
These timelines are typically that we have to execute that is about close to 6 months time from the day that we've got the orders that are there. So most of them should be executed within 6 months time.
Understood. And you were also expecting a H2 order inflow of around 100 to 150 crores. I mean, any updates on that? How much of it has, come on still in Q3?
Some of the orders have come in, but some of the orders are in tender pipeline, yet to be converted to PO. So we'll see more action coming on the Q4 towards the order book that is there.
Right. So with that, what's the target for the order book, by 26, that is March 26? How much of additional order book or order are you expecting? And with that, where your order book will be, I don't want the exact number, of course, the ballpark range where you see your order book at the end of the year?
How we look at it is, the revenue that we are projecting at about a 30% growth for the next 3 to 5 years at a CAGR perspective. We will continue to maintain that momentum as we go forward. With the current scenario, how things are, priorities change. We are living in a very difficult world right now. So very difficult to put an exact number to what is the new order inflow that will happen. But I can surely say from a long-term perspective that we continue to grow at a CAGR about 30%. That is what we have projected earlier. And we continue to deliver on that performance.
Did you say 50% of revenue growth in FY27?
No, I said 30%, 32 in that range, 30% plus, yes.
Okay. So just wanted clarity on one thing here. You started the year with, I believe, an order book of close to 260 crore, right?
Yes.
And currently it's at 142. So it clearly shows that execution has been going on. But what about incremental order inflow, sir?
That is coming through. Please remember, we had Operation Sindoor happening earlier this year. The priorities of the government were on emergency procurement and other things. So these the products that we supply are used for shipbuilding, for tank building, which are long-term projects. So there was kind of a delay in all those things, which are now starting to convert again.
So any timelines that you could give, say over the next 6 months, how much order inflow are you expecting, or for how much amount of order you have placed bid, you might win those orders, or you're in the L1 category? Some details on that front.
Very difficult to put a number around that. And I'll go back to my answer earlier that, the growth that we projected at the 30% plus, that is that we continue to achieve in those growth in terms of revenue that we see. We're pretty confident on that.
I completely understand it's very difficult to state a number of how much orders you would win, but at least you might have the number of orders which for which at least you have placed bid. If you could share at least that number.
Those numbers and the range of about close to 100, 220 odd crores that is there, which are still in pipeline per se.
Okay.
Right. And also, Mr. Shah, just, stretching this on the revenue growth, you said 30% CAGR. Now I'm assuming that won't be linear, for the next 3 years, because if you see the CAGR growth of yours has been 58% now, and I understand because of low base also. But are you being conservative on the 30% of CAGR growth that you have envisaged?
We are being more realistic there, Zed. This is something that we are very confident of achieving, and that's the number that we are showcasing and telling investors. This is a number that we feel confident of going forward. Of course, the effort will be there to increase on that number, but this we can confidently say that we should be able to achieve.
Understood. And also on the autonomous underwater vehicle, you're betting big on this. Just wanted to understand what is the capex plan and when are the commercialization timelines and revenue contribution, if you could, give us details on that.
In autonomous underwater vehicle is a very high-tech thing involving several technologies. The product is under development stage right now. So the first target is to be able to successfully prove the prototype developmental model, which should be closer to the year end of this financial year, to December 2026. We see that coming in, and then we will talk a number. So the focus right now is to successfully build the product as per what the naval requirement is there.
The bulb production capacity, I believe you have expanded that to around 4,000 to 4,000 tons per annum in FY26. Any other capital expenditure plan that you have envisaged for, say, for FY27?
Not major, not to this tune that is there, but we're working on a couple of projects that are there. If those projects fructify, then we will be looking at doing some capex even in the upcoming financial year.
Okay. Also, if you could just help us with this, the the current infrastructure capacity that you have, how much revenue can it be? How much revenue can these infrastructure capacities generate, or how much of how much more scale is there when it comes to revenue growth here on your existing product base?
Yeah. So the revenue growth in terms of capacity installed that is there, assuming the same product line that we are working on, is in the range of about 400 to 500 crores that is there, which will involve some way of mechanization, automation that we will look forward to take on to. But with the existing product range and the capacity that we have, we see moving the ante to about close to 400 to 500 crores.
So, Mr. Shah, on that JV with the Netherlands-based company, any capex aligned to that, and when can you see that contributing to your top line?
Capex for that has already been initiated around, that is that the basic, because the testing and all those things we have completed. We see that adding to our revenue systems somewhere around Q2, Q3 of FY27.
And Mr. Shah, so you won't be doing any major capex in FY26 and FY27 as well?
FY27 we'll be doing, but not any major capex. But if we are working on a couple of projects with the Navy right now, and if those projects take off per se, then we may be looking to do. But we are waiting for to move forward on those projects with the Navy and one with the Army too.
I believe you also have a few stake in multiple other companies, 20% stake in Conceptia Software, 40% stake in Wave Optics. What is your plan here? Do you aim to increase your stake more to around 51% in these companies, and going forward, what are the plans with these companies that you have?
Let me just brief you on what both the companies do. So Conceptia has been in existence for over 15 years. It's a ship and a submarine design company. For us, it was more like a backward integration. So it was a natural tilt to have a design element in our company. So we were not only delivering just a steel or a product that is there, but we had the capability to deliver a complete platform or a product. So that was the idea behind taking that company. There is consistent growth happening on the marine side and the shipping side also. So we see a lot of business coming in if you're able to both design and make the product forward that is there. That is the reason to work with Conceptia. Whether to increase stake and all will be dependent as you move forward. It's more of a strategic investment that we wanted to do. With Wave Optics, it's a defense electronics company that is making modules for conversion of radio frequency to optical fiber and vice versa, which has several applications that we are taking forward. We have about 40% stake, and at the right time, if permissible, we would want to try to increase the stake going forward. But that all depends. There's nothing that has to be done immediately for now.
Understood. Well, thank you so much, Mr. Shah, for answering all the questions, and it was great having conversation with you. Thank you so much.
Thank you. Thank you very much. Thank you. Thank you. Appreciate it. Thank you very much.
Thank you. Well, this was Krishna Defence outlining 30% of CAGR growth for the next 3 to 5 years. But with that, let's also invite the guest for our show, Mr. G. Chokhalingam, who's the founder and MD at Economics Research. Mr. Chokhalingam, you heard the management of Krishna Defence. What are your views on the same? What should investors do considering the 30% CAGR of revenue growth that the company is expecting for the next 3 to 5 years?
Yeah, definitely they have done extremely well in the last 3-4 years. But that is in the price. Stock is trading at around 49 PE. So therefore, I would suggest that as stock keeps rising, one can book profit. There is only one concern. In FY23, the fixed asset was just 12 crore, and FY26 September month, it was around 22 crore, just 10 crore addition of fixed assets, but the revenue almost tripled. So I'm not able to understand, with such a marginal addition to fixed assets, how they achieved such a phenomenal. But one should congratulate the way they have performed very well. Just I would go by the valuation multiple in this stock market. So therefore, I would give sell call as stock keeps moving up.
Right. A sell call coming in from Mr. Chokhalingam on Krishna Defence. Moving on, before we talk about the next small cap stock, let's get in Puneet to understand what's been buzzing on the F&O side.
Well, thank you for that. Well, largely the Sensex continues to be under pressure today, and Larsen and Toubro has continued to be under pressure, and that has actually increased as we've gone through the day. So now stocks down 6.65%. Indigo as well as Maruti, Adani Ports, Asian Paints, and some of the other ones that are down and out today, given what we see in the global uncertainty across the Israel-Iran war now. barring BEL as well as Sun Pharma now also in the green. You're seeing a red screen across the board, and when you look at the banks also, that also is not giving too much confidence at this point of time. So you're seeing SBI, Federal Bank as well as Bank of Baroda continuing to be in the downtick today, and with SBI, the 1200 mark touched. Since then, we've seen a sell-off, and while not a deeper one, continues to be a stock that's under pressure today as well. But when you look at stock-specific action, the longs largely, when you put the build-up on the defense names, do prop up, as well as the safer plays like Hindustan Zinc. So solar industries is up almost 2.5%. In terms of the shorts covering as well, we've seen Muthoot Finance as well as BEL come on the fray as well. So a similar story playing out in the defense way, where longs are being built on and shorts are being covered as we speak. In terms of the long unwinding, Samvardhana Motherson is seeing a stock that's done decently for its investors in the recent time, but hit that high and now seeing selling pressure there. And NBCC is also the other one. The larger infra companies are definitely bearing the brunt, but the mid-cap ones are also not showing any sign of progress or growth at this point of time, and that's visible in the stock prices as well. Finally, in terms of the short build-up, you're seeing L&T there as well as RVNL now also that's propped up on the list. So these are some of the other key stocks that are seeing build-up of shorts, but largely this is the stock-specific action, seeing the effects of the Iran-Israel war on all of these stocks and more.
Right. Thank you so much, Puneet, for all the details. Well, viewers, let's split into a very quick break. We'll be back with other set of small cap stocks on our radar to stay tuned.
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
First India tour in your city. Rug on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक concept नहीं है. This is my life.
Well, a host of stocks that we need to keep an eye out for, given the fact that the geopolitical issues have a bearing on them. Firstly, if we talk about the travel proxy trades like Ixigo, Yatra, Ease My Trip, Thomas Cook, RateGain, SpiceJet, all are trading down in trade, down more than 5 to 10% in trade, and this is largely because of the geopolitical issues that we have been listening. Firstly, the Dubai International Airport sustained major damages and it has been shut. The airport in Abu Dhabi and Kuwait were also struck. Thousands of flights have been cancelled across Middle East, and at least 8 countries have shut down their airspace. There is Iran, Israel, Iraq, Jordan, Qatar, Bahrain, Kuwait and UAE all have declared that their airspace has been closed. So this will definitely have a bearing on all the online travel companies and also on airline companies, because Gulf region is the primary corridor linking India to the Middle East, Europe and North America as well. And just to give some number, in FY25, a total of 74 million passengers travelled from or to India from various cities, from various international cities, and of this 74 million people, nearly 36 million passengers, that is nearly 49%, were from the Middle East nations like UAE, Qatar, Saudi Arabia, Oman, Kuwait, Bahrain, Iraq and Iran. So this just gives you an idea or perspective that what number of passenger could get impacted if this shutdown continues to remain in force for the next few days or next few months. We are still not clear on that front. So that is one thing, and that is one of the reasons why these stocks are down. On the flip side, stocks like Jindal Drilling, Deep Industries, HOEC and Antelope Celan, these counters have been gaining in trade because largely they are beneficiaries of rising crude oil prices. Now Brent crude is trading near $78-79 per barrel, which is the highest level that we have seen since June 2025, and this is because of the geopolitical issues. Now Iran's oil production might be on the lower side. They contribute just 3% to the global oil number, but they control the Strait of Hormuz, and because of that nearly 20% of global oil and gas passage happens through the Strait of Hormuz, and because of the current tensions we have seen a surge in crude oil prices. So how does this higher crude oil prices benefit? Firstly, companies like oil explorers like HOEC and Antelope Celan. Higher oil prices leads to higher realization, and higher realization means higher earnings for both these oil explorers. When it comes to oil drillers, there won't be any immediate benefit that could come in for these companies, but sentimentally it's positive because usually higher crude prices lead to improved drilling activity, and improved drilling activity leads to higher offshore rig rates, and if the rig rates improve going forward, then these companies could tend to benefit out of that. However, at this moment there won't be any financial impact, it's just sentimental. But when it comes to oil explorers, yes, there could be an immediate financial impact that could come in. Mr. Chokhalingam, the stocks that we discussed, firstly on the travel agency sides, and then if you look at drilling companies and oil explorers, how are you looking at these counters? This current fall, is it a time to buy online travel agents like Ixigo, Yatra, IsMyTrip, anything that you find interesting here?
Among travel companies, I find Thomas Cook very interesting. It has got a very good durable business model. It has also got a lot of resorts and fixed assets. There is a great value inside this company. So I would prefer Thomas Cook among all these. But I would not prefer any oil-related company because I may be wrong, but I believe this is only a temporary tension. It is unlikely to last for very long. And also oil outlook, I have a very negative in the medium to long term.
Right. Well, moving on, Fino Payments Bank. Let's see what that stock is doing. That stock though recovered. There you go. The stock is down almost 0.8%, but the shares of Fino Bank fell sharply in early trades. Now this is because of arrest of MD and CEO Rishi Gupta, where the stock later, we are seeing a good recovery there. Well, the reason for the panic was, of course, we all know that CEO was arrested under GST Act and the investigation was linked to business partners though, and the company says that this is not related to bank's own GST compliance. And there was a clarification, and hence we are seeing this recovery. Well, the probe pertains to program managers linked with multiple banks, no involvement of bank officials, and a quick recovery shows limited panic after clarification. And special board meeting has been conducted wherein Ketan, a merchant, was appointed to oversee day-to-day operations, which ensures business continuity. And management did come on con call and clarified all those things, and hence we are seeing this recovery in the stock. Let's see what are the con call highlights, wherein the bank and Mr. Gupta have no role in program managers, do not foresee any financial impact right now as said by the management, and bank has not issued any fake invoices, and they doesn't maintain any current account of program managers, and there's no GST evasion by the bank, and GST evasion is on program manager side. So no impact on company and no impact on financials. Well, Mr. Chokhalingam, though the stock has recovered, what will your advice be to investors in such stock?
I would avoid. There are so many stocks out of 4,000 listed stocks to look out. I would stay away from, when such issues arise, I would avoid.
Thank you, Mr. Chokhalingam. Thank you for joining us and giving us your perspectives on the host of stocks that were discussed on the show today. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
Year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The calls of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सेप्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri. With me is, as of course, is Mahima Vajrajani, and it's a tough day for the markets today. Sensex is down almost 1,800 points at this point of time. The Nifty also under pressure and relenting as we speak, because we've seen the pressure intensify actually in the last hour or so, and there you go, because we are maintaining 24,600 now. When I said 24,600, because we've been consistently talking about the 25,400 mark we maintained. We're now very close to the level that we were when the budget session had happened. We hit the low at that time of 24,600 to become a very, very crucial level, down almost 560 points at this point in time. Let's pull up the heat map for the Nifty 50 and show you stocks such as Larsen and Toubro, which are under pressure today. A lot of order book coming in from the Middle East for the company, and hence stocks under pressure today. You're also seeing Indigo, Adani Post, Jio Finance, Maruti, and as well as Tata Motors PV down. And the auto sales weren't that bad. They weren't half that bad actually, barring a couple of names like, which you were seeing slow growth. You've seen almost a 20% growth for Mahindra and Mahindra, 30% growth for TVS, but stocks not showing that one bit at this point of time. When you also look at the advanced decline ratio, before I toss to Mahima for the broader markets, you continue to see that it has been a broader market pain essentially, and that has built out to almost just 200 stocks that are advancing in trade today, and almost 2,400 which are declining. But Mahima, the pain clearly visible, and if you also look at it's a broader market pain in that sense, unrelenting to say the least.
Yeah, unrelenting to say the least. I mean, 200, have you ever seen that number? I don't think I have in my career so far seen that 200 number on the advances versus that of such a big decline number. Just before I talk about the mid cap and the small cap, the VIX, Puneet, look at the way it is moving right now. It's almost 30%. If you can quickly pull that up, 29.3% at the highest point, and that indicates the volatility in markets right now, and that's reflected to the way the markets are reacting, right? The mid cap 150 is also down by about 2.6 odd percent. The small cap 250 almost now down by about 3 odd percent, 2.92. So both at their day's low point. So it's not looking very good when it comes to the broader end of spectrum. The BSE 500, if you can try to pull that up, I mean, I'll be surprised if there is any stock which is, except for Tejas Network, which is, unarguably the stock of the day. But Sterlite Tech is Muthoot Finance. Of course, all of this Muthoot Finance on the back of gold prices going up because of this war. Solar Industries and Phenolics Cables are some of the counters which are in the green. But on the flip side, you have all of these names, Easy Trip, you have something like Redington, Relaxo, L&T, MMTC, Birla Corp, Asahi India, all down in that range of 6 to 8 odd percent. So, I mean, bloodbath could be, the least, scary word that I can use for the market position right now. But with that, let's also welcome in, our guest for the day, Lancelot Dikuna, CIO of ValueX Wealth Connect LLP, and Rajesh Palavia, SVP Technical and Derivative Research at Axis Securities, joining us now. Rajesh, before I take on, the queries, I think your perspective for the markets right now is of the utmost importance.
Hi, good afternoon. So it's carnage on the street, and looking at the breakdown below 200-day moving average, and again, all the baskets, all the sectors are witnessing a sharp selling in today's session. Now Nifty is almost trading almost near to this budget day low. So I think 24,550 would be the next level to watch for. If it's break, then I think another 200 point down move can open from those level. At this juncture, we are in oversold trajectory, so maybe some pullback would be there, but again in the pullback 24,750, 800 are the area where again shorts are still there. Looking at the call put concentration data also, the major call writers are now at lower strike at 24,700, 24,800 strikes. So these levels are likely to act as a supply zone for any minor pullback if it's come. But looking at the overall setup, we believe that if we continues to trade below 24,800 level, minor pullback should be used as a shorting opportunity. We could see further lower level towards 24,300, 24,200 level also. So structure is now damaged on the near term, short term. Bank Nifty has also broken the important support area of 60,000 also. And looking at the call concentration now shifted at lower strike, which is also showing that whatever minor pullback if we get in Bank Nifty also, here also we may see a supply pressure and possible down move towards 59,000 we could see for Bank Nifty also. So structures are damaged for near term to short term also.
Got the view, Rajesh, and thanks so much for that view. But continue to take stock related queries at this point of time. If you haven't already, do start sending them on the WhatsApp number. You can also call us, talk to us as well as our experts directly for your stock related queries. Both numbers on the top of the screen right now. But the first one coming in on Emphasis, our viewer Ramesh has bought 27 shares at 2,772 odd rupees. He is currently sitting on a loss, asking what he should do with this counter. But Lancelot, let me come to you. Welcome to the show. What would you recommend him to do? What would you recommend Ramesh to do at this point of time with Emphasis?
Good afternoon, Puneet. I think, if you look at Emphasis, it has been hit by two things. One is, of course, the AI theme that is playing out, and based on that, the stock is down. And if you look at, and obviously now based on the situation in the Middle East, which while may not affect their business directly, but indirectly they will have an impact as the economic fallout of this situation is felt across the globe. So if you look at it from a valuation perspective, the stock is trading at about 23 times its earnings. And given that we may see earnings downgrades, going forward, because of a variety of reasons, partly related to AI and partly related to the situation, it may be better to wait. Even if you want to average out into the stock, maybe better to wait for maybe another drop. And at that time, one can look at accumulating, because the IT space and some of the companies and many of the companies in the IT space are going to take a long time to turn around and to see earnings growth again. It's going to take a while, and that means that the stock will not get re-rated for a long period of time. So one should be rather cautious and buying, especially because you're looking at it from a long-term perspective.
Okay, all right. So that's the view coming on Emphasis. The next question that we have is from Sankara Rao, who's writing us from Vijayawada, asking about Anant Raj, and he wants to know if this is a good time to enter this counter. Rajesh, this counter also, kind of rallied because of this whole AI data center boom, of course. But do you think it's the right time to make an entry?
So looking at the weekly structure, stock is holding the multiple support area, which is placed at around 500, 490 zone, which is very important and crucial for near-term, short-term perspective. If at all stocks manages to hold 490 level in this kind of volatility, then yes, there is a possibility that stock may show some pullback action from the current level itself. So if you want to buy here, keep strict stop loss of 490. On the higher side, once stock able to take out above 550 zone, then yes, we may see some rally towards 600 level also. So you can buy, but keep stop loss of 490.
It's also important, to see on such days what is actually doing well, and surprisingly, MCX is one of those plays. Sunil from Pune is actually holding shares at 2,500. Let's pull up the stock. MCX is what I'm talking about, and he's holding 56 shares. Stock's up 2.5% on a day like today, and so he's bought it at very close to the current market levels. But Rajesh, he's asking a short-term view on the stock. It has been under pressure as well, but what would you recommend?
So MCX is in uptrend across all time frame. Yes, from days high, some profit taking we have seen in this counter. But if we analyze on the long-term perspective, stock is holding the strength. Stock is almost trading near to 20-day moving average support area. So still trend is on the bullish side. 2400 needs to keep as a stop loss. Once stock able to take out about 2570, then possible really towards 2751, 2800 we may see in the MCX. So hold the position with stop loss of 2400.
In fact, it's also, I think, up because of your crude, your
gold,
silver, etc. trading at higher prices and volumes going up for something like an MCX. Just to take a follow-up query on this entire aspect, right? Crude. Sriram Raghuraman from Chennai is asking this question on Oil India. Now, this is one of the companies that probably stand to benefit from elevated crude prices. She's bought 50 shares. He's bought 50 shares at the average price of 172. Wants a one-year view on this particular counter. Lancelot, what's the view like?
So, Oil India is engaged actually in the in assistance as far as the oil exploration company is concerned. So they provide engineering services for oil exploration. Now, just because prices may have gone up in the short term, it doesn't mean that exploration activity is suddenly going to get increased and you'll find orders coming to them. And second is most of their orders are domestic. So in that sense, nothing has changed perceptibly on the domestic side. And so the stock is already factoring in all the positives that were there from their earnings as well as from their future outlook. And if you look at valuation wise, it is still relatively a little expensive. So there could be, whenever there's a correction, you could see a re-rating of the stock on the downside. So one should be a little cautious and probably wait for lower levels to add to the stock.
We were also showing these numbers coming in from Force Motors. Now the auto pack largely not showing so much reactions, and it's been a decent set of numbers. But look at the Nifty auto, and you might think otherwise, but that's largely the state of the market where we're in, because sell-off even in areas where there are good profits made is a theme that's visible today as well. But decent numbers from Force Motors, 8% growth in its domestic sales. But let me go across, take the next caller for today from Bengaluru. Rita has a stock query for us. Rita, good afternoon. Welcome to the show. What's your query?
Yeah. So since some of the stocks have corrected today, so I'm looking for long-term investment. So is it good to buy GMR Airports or Anantraj or L&T? I mean, which one to enter in this lower level?
Got it. Well, Rita, opportune time, opportune question as well. But Lancelot, between GMR Airports, Anantraj as well as L&T, what would you recommend Rita to look at right now? And would it be in a staggered manner, or is it a good time to enter according to you?
I think from the three stocks that she has given, probably L&T offers the most, a fruitful risk return, benefit, because while the order book, almost 37% of its order book does come from the Middle East, and that could get hampered in terms of implementation. On the other hand, they also do have a larger domestic business. And second is that, there will be more orders. If you're looking at an investment time frame of 3 to 5 years, then there will be more orders that will come in terms of rebuilding a lot of the infrastructure that has got damaged during this period of, war, etc. So I think opportunities will be better for a company like L&T because of its strength in terms of being able to to sort of ride through this crisis period and then emerge stronger as the business again kicks in as compared to the other two companies.
Okay. In fact, Geeta also, who was calling us from Bengaluru, had a query on L&T, and Lancelot has already answered that. So, Geeta, I hope that solves your query. But Rajesh, quickly, I'll take up L&T with you on charts as well. What is the technical setup looking like?
So long-term structure is bullish, but yes, on the near-term chart, some profit taking we have witnessed in this counter. Stock is almost trading near to its 50-day moving average support area, which is placed at around 4,000, 4,040 area. So I think if stock able to regain above 4,050 level, I think here we may see again, continuation of uptrend. Overall structure is bullish. Buy and accumulate would be the strategy. On the downside, keep a stop loss of 3,950. And if your horizon is for long term, yes, we do hold bullish view for this counter.
Okay, the next one is on ITC Hotels. Ashish from Delhi is asking. He's holding 2,000 shares at the levels of 202. He says that it's moving towards its 52-week low. Should he average out and buy at that levels? ITC Hotels is the stock. Lancelot, what is your view? I mean, it's not that, it's not been performing well. The fundamentals, the operational metrics look strong enough, but the stock is not moving. What's the view like?
I think as far as ITC Hotels is concerned, you have two issues. One is obviously the business is going to get impacted because if this war gets prolonged and does not get settled, in the next couple of months, there could be a large number of cancellations for foreign tourists coming into India. People from the Middle East may not be traveling. There could be disruption as far as weddings and conferences and other things are concerned. So all of which are actually feeding the hotel business. So definitely this will have an impact on its profitability. Second is there is still a bit of an overhang on the stock as far as British America Tobacco Company, who's a major shareholder, has been liquidating part of its investment over time because they do not want to remain invested in hotels because that's not their core business. And every time they need to liquidate, there will be pressure on the price. So that also will add to it. But if one is looking at, you can accumulate the stock at, from current levels downwards in small lots, because over the next 3 to 5 years, definitely the business will grow and you will see significant growth coming in here, and valuations will then move up as things normalize.
That's the view on ITC Hotels, but we have Mansingh calling us from Andhra Pradesh. Mansingh, you have a question on translated lighting, I suppose.
Yes, ma'am.
Go ahead.
I'm holding 150 shares, ma'am, at the rate of 620 rupees. And fundamentally, it looks very sound and a good order book.
Right.
Should I wait for average, or should I start accumulate here more? Should I add more number of shares here, or should I wait?
Got your question,
I want to know the
Mansingh.
technical view from Rajesh Palve, ma'am.
Okay, Rajesh, translated lighting, your quick view on this one.
So stock is in corrective mode, and in this pullback, stock has witnessed a major supply pressure at around 600 level, which is very important to cross on the higher side. Once stock able to take out this 600 level on a weekly closing basis, then we may see some pullback action towards 650, 670 zone also. So at this juncture, in this correction, if your horizon is for little longer term, so yes, you can buy and accumulate. On the downside, the major support area for this counter is placed at around 490, 475 zone. So use this volatility as a buying opportunity in this counter if you want to buy for long-term perspective.
Time now for the rapid fire round in this edition of Fast Profit. Just as we are seeing a 150-point recovery on the Nifty in just the last 17 minutes, but Rajesh as well as Lancelot, you know the drill. The first question, it's on CMS Infosystem bought at 320. What would you recommend, Lancelot?
I would recommend, one can exit at this price.
Okay, Asian Paints is the next one. Rohit wants to know if this is the right time to accumulate. Lancelot, your view?
Yes, Asian Paints one can accumulate.
Shriram Finance, is it a right time to enter is what Anil Singh is asking. What would you recommend, Rajesh?
Yeah, one can buy at current level also.
NTPC is the next one. It's dropped 2.5% today, but for the next 5 years, can I continue to hold? Lancelot, your view?
Yes, one can continue to hold NTPC for future as well.
IRFC, should Sridhar continue to hold or sell out, Rajesh?
No, avoid at this juncture.
Okay, Paytm, will it be good to increase position right now? Ashish from Cuttack is asking this question. Rajesh, your view?
If your view for 6 months, yes, you can add in this decline.
The next question that's coming in is on MRF, bought at 144,000. A short-term view, Rajesh, is what Anita is asking. What should she do?
MRF, continue to hold it. 130,000 needs to keep as a stop loss.
Okay, Canara Bank is the next one. 200 shares bought at the levels of 148. Divya wants to know if she can average. Rajesh, your view?
Yeah, she can average out at current level.
Crompton bought at the current levels by Anuj. Should he continue to hold, Lancelot?
Yes, he can continue to hold.
Okay, Lemon Tree is the next one. 140 shares bought at the levels of 117. Should I hold or book profits? Arun from Hyderabad wants to know. Rajesh, your view on the charts?
No, I think exit as the stock has broken the support area.
Canara Bank bought at 148. Lancelot, should Divya continue to hold this counter?
I think one can exit this counter even at this price.
Okay, the next one is on Reliance Industries. From long-term perspective, can Pawan Kumar go ahead and buy right now? Your view on this, Lancelot?
Yes, one can look at adding in small lots.
Okay, all right. So that's the view coming on Reliance. But with that, viewers, completely out of time. Lancelot as well as Rajesh, thank you so much for taking out the time and of course helping us answers, on a day where it's much more required. So thank you so much for that. With that, viewers, completely out of time. Do stay tuned. India Market Close up next.
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
The expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The calls of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सेप्ट नहीं है. This is my life. This is my story. One night, no repeats. Go get tickets now.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Welcome. You're watching India Market Close, and it's one of those sessions where perhaps investors will be happy that the market closes. It's been a really tough day. Any kind of recovery that was hoped for after markets opened gap down seems to have evaporated. Although at 2 o'clock this afternoon, if you look at this line graph here, you have seen some amount of relief coming in. Now, what happened here between 1:45 p.m. and 2 p.m.? It started becoming clearer and clearer that fighting is only intensifying, and oil refineries in Saudi Arabia are now being targeted. Here's what's happening. Quick snapshot for you on what's happening in the markets this afternoon. The Nifty is struggling around the 24,700 mark. It's seen its worst year-to-date start since 2023. for the month of March. You've seen a 533-point drop on an intraday basis for the Nifty. But remember, budget day was actually worse. That was a 749-point drop. So through the day, budget day was even worse than today. But on a year-to-date basis, it's been the worst drop since 2020. Over 1/4 Nifty stocks have fallen between 2 to 7%. That's how deep the cuts have been. And 95% Nifty mid-cap 150 stocks have declined in trade. It's the broader markets that are hurting even more. And if you look at the small cap, you will see what I mean. 90% Nifty small cap 250 stocks have declined in trade. Support levels, remember, on budget day were at a low of 24,571. And for the bank Nifty, support levels are at 59,000. What is gaining? Let's show you some of those safe havens that are gaining, and where investors can really hide for some kind of cover. Muthoot Finance has seen a Morgan Stanley upgrade. So, some relief was seen there at the earlier part of the day for Muthoot Finance. Hindustan Zinc, because of higher silver prices. Select defense names were also there in place. Remember, markets are closed tomorrow for Holi, and the Nifty weekly expiry has been shifted to Monday. That's also what you're seeing. That compressed time frame is where you're seeing all of that volatility. I wonder if you can pull up the India VIX before I show you the charts for the day. And India VIX is nearly 27% higher. I mean, this is astonishing at 17.5. This is showing you where the fears of the market are. Let's pull up the Nifty heat map for you very quickly and just give you a sense of where we stand. And it's quite a bloody day, to be honest. There was some hope that things would be better than expected, but it has been quite harsh. Of course, Indigo, flights cancelled, crude prices, no brainer, 6% down. Larsen and Toubro, fair amount of exposure in the Gulf region, which is why that crisis. Adani Ports, anything to do with logistics, will suffer right now. So you're seeing that through and through. On the winning side, Bharat Electronic, Hindalco, ONGC, obvious choices, crude prices go higher, are doing okay. But European markets have also been hurting, which is why you're seeing this escalating pain point everywhere. I'm just going to pull up the BSE 500 gainers and losers before Hiral comes in and tells you about the factors of the morning. I mean, Tejas is in a parallel universe. There's a parallel Marvel universe going on when it comes to Tejas, which is why it's another 10% up. But we told you about Muthoot Finance. That has been working well. Solar India, and some of those stocks, they're few and far in between, because if you look at the advanced decline ratio, it's quite dismal. On the losing side, Easy Trip. I mean, people are not really excited about traveling right now. And a lot of travel coming in from India happens in this region, which has impacted Indigo, L&T we spoke about. And there you have quite a few pain points, Hiral. I'm sure the advanced decline ratio is also looking pretty poor at this point.
Yeah, I mean, you can see that from where we started off. We've still slightly, in terms of the advances, Tamanna, we've improved, but in terms of the declining, we're absolutely where we are.
Yeah.
So no major changes coming in on that front. But what's interesting is that recovery that you spoke about as well. So I think that little bit of certainty that's coming in to some extent is telling you where we are right now. Still, the cuts are deeper. Let's not forget that. How further down we will go is the key question. In fact, let's quickly look at a few of the factors that we are watching out for. We'll quickly swipe them through, because you're talking about the escalating geopolitical tensions in West Asia, which have triggered that further sell-off. Now, the operations at Aramco's refinery in Saudi Arabia have been suspended post the drone attack. Now, Aramco refinery, if you go to see, is one of the largest, and it is integrated with the Ras Tanura port, and that's why it becomes very important. When you talk about what goes from Ras Tanura port, that is crucial, because it's an outlet for Saudi oil for Asia, Europe, and the US markets as well. So even India comes in, in consonance to this. Now, moving from here on, if you see in terms of Nifty, Tamanna was talking about the support level. Now, 24,700 has been the key support that everyone was watching out for from a psychological perspective. But now we've again retraced back above the 24,700 mark. But on the downside, two levels that you should be watching out for is 24,600 and 24,500 if there is a further correction. In fact, in today's session, almost close to 7 lakh crores of wealth erosion is what investors have seen so far. Moving on, if you see in terms of the rupee movement is also very important. We've weakened to a 1 month low, and this is because high oil import bill is something that is weighing on the sentiment. In fact, in the month of February, we were talking about the kind of improvement that rupee has seen since October. Lastly, if you see in terms of the US dollar, there you're seeing 0.5% move coming in there. The 10-year GSEC yield, that has risen to almost 6.69%, and this is on the back of the potential inflationary pressures that could be coming in from energy costs. So this is what you're watching out for in terms of, the factors in today's session, which talks about sectors and macros. Over to you, Tamanna.
Okay, we'll get back to some more of those. Himain Kapadia is with us this afternoon, as is Lancelot Dicuna. Welcome to both of you. Himain, I want to start with you first. I mean, are you seeing something at the end of your chart with the way markets are falling? What really are the levels that you're looking at?
A very good afternoon to you, Tamanna.
Good afternoon.
Thank you for having me on the show. It's always a pleasure.
Yeah, likewise.
Very well, frankly speaking, we should have been given a holiday because India qualified for the semi-finals and we wouldn't have been put through this torture. But anyway, on a serious note, Tamanna, thing is, we are at, I won't say crucial, but reasonably important levels. Just give me 30 seconds. Nifty made a low of 24,605 on 1st October. Nifty made a low of 24,571 on 1st February. Nifty makes a low of 24,603 on 2nd March. The reason for giving you these data points is this is the third time we have come back to this level. Once we briefly broke through 20 and reached 24,344. This is besides the 3 points that I told you. There was a bullish gap. I spoke last time that needed to get covered up. Now there's a bearish gap. So firstly, if 24,588 breaks, I really, at the risk of sounding utterly bullish at this point in time, I think not. Like you mentioned, VIX is at 17.5. If you go back in history, many times bottoms have been made on the highest possible VIX, Tamanna. So we've come to this previously tested level for the third time after a precipitous sell-off. I say this holds for 48 hours. Things should simmer down. And this bearish gap that we have seen, by the time we speak next Monday, I think we would have covered that up. So things don't look good, but I'm not that bearish after what has happened. This level is crucial. If it holds, I'd say, I'm not telling you to buy, do anything, but not panic. It's okay. We've been here, done that. Tamanna.
Been here, done that. You said you should have had a holiday on Monday. Tuesday anyway is a holiday. Wednesday is actually supposed to be Rang Panchami. So basically, you want the week off. Let the world come to its senses. Pretty much is what you're asking for. But since we have to work and, wishful thinking won't cut it, what would be your picks?
Well, sorry for dragging it further, but China has 6 days holidays. Why can't we see the semi-final and 1K day on Thursday and then start the market anyway?
Oh, okay. So Friday straight. Yeah, it makes sense. If you're going for it, then end to end.
Yes. Okay. Now, seriously, it really doesn't make too much of sense in doing anything. But yeah, these are small trading buys, Tamanna. Firstly, a buy call on ITC. Oversold, positive divergence, downside limited at strong supports. So it's a trading buy at 310, stop loss 295, target 340. Second one is Infosys. I believe the IT thing has been hammered. Everybody left, right and center is bearish. Classical times for a bottom being made. So as of now, I'm looking at a short-term revival. I think this could convert into something on the medium term. It's really, really overdone. Buy Infosys at 1280. Stop loss 1240, target of 1360. Once again, same logic applies. At strong supports, oversold, positive divergences are coming. Oscillators are giving crossover buys. Tamanna.
Okay. Infosys is an interesting pick that everyone's watching out for, because if the reversal is overdone, probably this would be a good opportunity as well. But let's quickly take all the viewers through the stocks that we will be discussing during the day, at this hour, I would say, and what's on our watch list. L&T, the top loser in today's session on the back of the exposure that they have to West Asia. Oil marketing companies could see fuel margin pressures, and that's what is you're putting that pressure on BPCL, IOC and HPCL. ONGC, Oil India and Reliance Industries also on the back of the geopolitical premium are in focus. Your shipping companies on the back of the tensions in the Strait of Hormuz are putting pressure there. Aviation stocks again on the back of jet fuel prices and a lot of your cancellations that do come in. So it's a double whammy when it comes to aviation counters, so watch out for this space. online travel companies, your B2B travel companies, all are under pressure. Titan Kalyan, again, it's the exposure when it comes to West Asia. Defense companies, it's interesting because sentimentally it becomes a positive, but now you've already started seeing profit booking coming in that space as well. Hindalco, where the UBC scrap prices have surged, so that counter is in focus. Tejas Network, a couple of days ago, they did see a 5G order win. That stock is up 55% in the last 3 trading sessions, and that's the reason why that strong surge there. In fact, that's the stock of the day as well. And CleanMax, a weak market debut, Tamanna, that we've watched out for on this counter. The subscription levels itself for a CleanMax were very low. So something that was anticipated, but really, I mean, a bad day for them.
I think CleanMax also gets a little bit of a reprieve because dini itna kharab hai, so maybe it's a bad day. But we'll have to wait and see if it actually recovers. Just want to take a quick look at what's happening on the F&O side, and Puneet joining us with that BSE F&O setup. Good afternoon, Puneet.
Well, good afternoon, Tamanna. It's largely been a down and out day. Just seeing some buying, in the latter half of the last 30 minutes, but continuing to see a very theme-specific action even on the F&O side. So defense as well as the safer plays like Hindustan Zinc is seeing build-up of longs currently in the system. When you also look at the short covering, you are seeing stocks like Muthoot Finance, largely the gold rally continuing and boosting, some shorts being covered in this particular counter, while BEL also continuing the defense theme where it is seeing short covering today in the system. When you also see that in terms of the longs being unwinded, Samvardhana Motherson actually, is one of the key counters, has hit that high in the last 6 months and come back and retreated yet again this time around. So seeing longs being unwinded for Samvardhana Motherson, and NBCC largely joining the list of infra companies that the market just doesn't want a flavor of at this point of time. Finally, in terms of shorts being built up in the system, there's L&T that features on this particular list. 37% of the company's order book coming in from the Middle East, and hence a down and out day for this counter. While RVNL is back again in terms of the build up of shorts after the budget yet again, and all of these counters in focus largely on the back of the Israel-Iran impact, but certain specific actions like L&T seeing that pressure on the stock as well.
Okay, L&T, no brainer. Over there with that kind of exposure is going to see some pressure. Neeraj joining in as well on the closing show. Neeraj, what are you really picking up? That nervousness, the swings that we're seeing up and down is clearly showing that the overall sentiment is very negative, but we've seen a fairly decent recovery from lows in the last 20 minutes or so.
Yeah, and good afternoon to all of you. And Tamanna, I would love to know how you are thinking about the geopolitical angle of it. I heard Hiral speak a lot about those individual stocks as well. So very interesting there. But just a couple of things that I picked up when I was speaking to a few market experts in the last 30 minutes or so. One, that save for the Australian markets and the Shanghai markets, almost everything else has been penalized today. Europe is not starting off well, and Dow futures as we speak are down 600 points because Iran reportedly has rejected those US stocks as well. And there is a Saudi Aramco refinery which has been hit. So crude, which we were talking about as not having a very rocky start, currently WTI above 72, 73, Brent above 79. So clearly the pressures are showing. It'll be very interesting to see how large is the FI sell number in the session today. Everybody's eyeing that because 3 people that I spoke to, guys, over the course of the last half an hour, everybody was unequivocally clear that for today's session in the near term, you'll probably see large FI sell numbers as well. And nothing quite looking constructive. Sure, there are individual pockets that Puneet highlighted, in zinc, etc., but nothing looking very constructive. And lastly, because we have a holiday tomorrow and the expiry today, I think most people are penciling in that people want to err on the side of caution and not quite go home with any kind of long positions because who knows what tomorrow might bring, and they might not be able to square their positions. So I think that's probably the tactical plays that are getting played out. But, same question to you, and I have a question for Hiral too, but Tamanna, to you. Now, because you looked at politics so closely, right? And you would have spoken to people, you would have analyzed it. This seems protracted in nature, or is it difficult to call right now?
No, some things have clearly become worse and visibly worse. So the statement from Qatar saying that US warplanes have been shot down in Qatar, but no one is hurt, that tells you that it's protracted. The Iranian security chief has said no to negotiations. They don't want to have any conversations with the US right now. So that is a big negative. What's happened in Saudi's Aramco unit, and which Hiral also spoke about, that is a negative, though they're now saying that it's being contained, etc. So some of those things are pointing towards escalation. Plus, today there are more reports of loud blasts heard in Dubai and Abu Dhabi as well. And you know, it could be anti-drone missiles staving off any attacks and then debris falling. That could be the source of the blast. But the fact that Dubai and Abu Dhabi, a very, very visible area in the region, is being targeted is telling you that Iran is trying to send a message, and it's not done yet. If we think this is going to be 1 or 2 days of fury and then it ends, that's looking unlikely, and that's what's really escalated since this afternoon. I want to go to Lancelot Dekuna and get his view on this as well. Lancelot, is the smart money saying stay safe right now? Or are we seeing enough optimism to boost that kind of recovery? Because there is a fair bit of recovery from the day's low across the board.
So I think, Tamanna, there would be some fall in valuations which would have prompted some amount of investment at lower levels. Given the steep fall that we saw, there's bound to be some accumulation at that levels. But like you said, this is not likely to be resolved in a couple of days. And I think the indication is that it could even take a couple of months. Now, the economic impact of a prolonged war, which is stretching over 3-4 months, is going to be significant across the global economy, and it will impact India and Indian companies as well. It is not merely looking at it only from an export perspective or an import perspective. When the economies of Middle East get impacted, companies which are related or even people related in India will get impacted, and that could have already we were having a little weak GDP growth, and corporate growth was just coming back, due to the improvement in situation with companies, as well as, because of the GST cuts, etc. We were seeing some demand improvement taking place, and all that could get sort of negatively impacted if this continues for the next 2-3 months. So I think from a smart money perspective, one should make some small investment, but definitely one needs to keep a lot of investment ready. If this does correct further, there could be a very sharp and deep correction. Then at that time, valuations will become really attractive.
No, fair point. I think and that's a fair assessment too. But Hemen, I want to bring to your notice the fact that there is a bounce that is happening now. Could it be because of expiry-led things, part one? But part two, I heard you say at the start of the show that you are maybe contra-bullish. So in some sense, from the low point of the day, your call has worked out well. The question is, because it's a holiday tomorrow, are you taking home long positions? Or would you square off any intraday profits that the Brave may have made?
Very, very valid point, Neeraj. But I would also go with half of you already, I think, answered your question yourself. If there wasn't a holiday, I would be slightly more copacetic about holding on for a day more. But like you said, I mean, there's a holiday, things could, worsen. But I just, like I mentioned, you must have heard, I mentioned with Tamanna, price points. This is the third time we've come there. So unless, I don't say this, but unless there's some real massive escalation, I hope that doesn't happen. I think this whole, but yeah, coming back to your main question, will I hold on for Wednesday? No. If I'm making money and was brave enough to buy at this point, I'd book intraday and go home.
So book intraday and go home is what Hemen is talking about. But stay with us. In spite of all of this negativity, there is one stock which has been skyrocketing in a weak market. In fact, if you see the 4 or 5 day performance, stock is up nearly 55 to 60% in the last couple of days. And we're talking about a Tejas network. What's working for them all this while? Because Q3 was pretty weak for the company, but in spite of all of that, a good buzz around it. My colleague Jasmeet joins it to tell us more. Jasmeet, I mean, we've picked Tejas Networks as a stock of the day, but lots brewing there. If you could just take us through, what are you picking up?
Well, Hiral, thank you for that. As rightly said, the stock has surged nearly 55% in last 3 trading sessions. Well, this thing comes after the company has received an NEC order from a Japanese corporation to supply the 5G manufactured and supplied units for telecom company. Well, in terms of overall stock performance, the stock is still down 48% when you look at a 52-week low level. So, though we have a surge, but the stock at a low base is still trading below its 1-year average. Now, in terms of the key trigger, the first one is the strategic 5G deal that the company has signed with NEC. While this deal is to extend, manufacture and supply the overall massive 5G radios. While this deal also helps the company expand their base, given NEC is a global telecom body and has access over 75 countries, this deal will help company to gain revenue but also increase the global presence and be a good alternative for Chinese product. Now the second trigger is the overall strong volume. The current volume which we see are roughly 14 times the 20-day average, which is pulling the overall stock price up. Now third is the PLI scheme. While the company is a big beneficiary when it comes to the overall PLI scheme which they get under the 5G and the broadcast radar, so which the company has been receiving in the terms of the refund from the government. The company recently received 70 odd crore in the month of Feb on the back of the same PLI scheme. While the fourth one is the Tata factor. While the company is backed by Panatone Finvest, which is a subsidiary of Tata Sons, and Panovest currently owns 53% stakes in the company, which is also a positive key trigger. Now, what is next? What to expect going forward? Firstly is the inventory risk. Do we have also some concern areas for this particular stock? The inventory risk, current inventory stands at 2,200 crore, while this is on the back of the delayed BSNL deal. Given the BSNL deal which company signed back in 2024 is still not executed, which is creating overall pressure on the overall company's inventory level. The second is the execution risk. The net debt stands at 3,300 crore. This is again on the back of delayed deal where they haven't paid the money back to the debt holders, and further that's what creating the pressure on the overall balance sheets. Well, third is the high cash burn. Company is currently funding its operation by the reserves they have. While the fourth one is the CEO position is still vacant and the company has no further commentaries on that. They're still looking for the right candidate, which in turn makes an overall direction weak for the company going forward. While the key triggers which can be going forward with the BSNL expansion, once they receive the PO order BSNL deal, that will be a key expansion for the company given the revenue flow in for the company, and company has been loss making for last 4 quarters on the back of the similar things of high debt and high inventory risk. Lastly, the company is pivoting towards a 5G model where they're getting international orders. Currently, international revenue forms 15% of the revenue, where the management targets 50% going forward. While that's some trigger which will be watched out carefully going ahead.
Okay. Thank you, Jasmeet, for that. In fact, Lancelot, I want to take a question with you on this one. Fundamentally, things were not really very strong when you talk about a Tejas network. Do you think this order could be a turnaround story and all the woos that the company has been sitting on will get negated because the surge is nearly 60%, or would you say just book profits and get out now?
So I think if one has bought it earlier and if you were sitting on 60% profits, I would look at booking profits at this point in time. The reason is that while this order seems to be very good and healthy, implementation of the order and the actual earnings that will come in post the implementation of this order is what will actually drive earnings. Then second is about sustainability of future orders going forward. This again could be a challenge because there are not that many manufacturers or people who are putting up 5G networks in the country or even overseas. So the market is also relatively on the smaller side and the investment is also large. So I think when you look at all these things together, I think it's better to book profits and take the money off the table. I'm sure you will be able to get the same stock at lower valuations at some point in time.
Okay. Just so Tejas is one bright spot, but I just want to focus a bit on the recovery that we are seeing across the board. And let's just pull up some intraday charts to get you those details. I mean, look at the Nifty. Yes, about 300 points down even now, but almost inching up towards the best part of the day as we go into close. I want to pull up the small cap because the small cap index is the one which was the worst hit through the day, and look at whether there's some recovery there. There's some recovery there as well. The advanced decline ratio will also give you a clearer picture. So we are going off the low points of the day. If you look at the sectoral heat map, and I wonder we can show you that broader picture as well of what is recovering the best at this point. You'll possibly see metals are showing a good recovery actually, not bad. Defense stocks anyway were doing decently. So that's also showing a bit of recovery, as are pharma stocks. I'm going to go across to Neeraj as well for a quick take on this. Neeraj, do you think that this is just essentially a technical recovery we're seeing, or some of those fears are fading?
No, I would reckon, my personal view, Tamanna, that it is, and based on the conversations that I've had, that it's a bit of a technical recovery. Too much uncertainty, right? And some of which you highlighted very well, some of which Hilal highlighted very well. So technical recovery, maybe some expiry led things, and just maybe because we were sold down so badly, much more than what the rest of the markets was. I mean, ASX, for example, ended in the green. So in some sense, some bit of that. But I would reckon the same logic of not going into the holiday with very large long positions would hold true for the short side as well. You don't want to go with extreme short positions because you don't know what will happen over 48 hours, since so much is happening in 24 hours itself. So I would suspect that to be the case. See no other reason except for just that sharp sell-off recovering a little bit. Let's see what happens in the next 40 minutes though.
Yeah, the next 40 minutes are going to be very interesting, whether if there is a reversal from these levels or not. And I think IT also is a sector which is coming into as a contributor, and the shorts probably that are getting covered ahead of the holiday tomorrow. But let's actually head across to my colleague Somit Sarkar, who joins in with all the chatter from the dealing room. Somit, the question over here is anything that you're picking up in terms of the recovery that's happening in the markets right now from the lows?
Well, as Neeraj was mentioning, it's most likely a technical recovery because Nifty seems to have found support near the 24,600 level. Now, do remember that the earlier support zone was close to that level at the budget day low. That was 24,571. That was the original support level coming in for Nifty. And around that level, yes, Nifty has found some support, and we have seen a strong recovery of around 200, 250 points odd in trade. But what dealing rooms are indicating is that there is not much of an optimism in the market. It's not that people are going ahead and buying stocks in a big quantity, in a big way, because they're quite bullish on the long-term perspectives, given the fact that there has been a lot of volatility and a lot of uncertainty globally that we have seen. But few stocks that dealers have highlighted in trade. Firstly, it's Vedanta. There are buy flows on institutional desk for this counter. At least what dealers are indicating is that the stock is currently best placed in the current situation, given the fact that commodity prices continue to increase, and Vedanta is one of the biggest, could be one of the biggest beneficiary of that, given the fact that it has exposure to aluminium, silver, zinc, and also oil as well. When it comes to L&T, the stock is down in trade, down around 5%. This is largely because of its exposure towards Middle East. But post this fall, a few large HNIs have started to accumulate this counter at lower levels because they see long-term opportunities that could come in going forward as and when the situation settles in the Middle East. And lastly, a few stocks that are there on the DI desk that are seeing buying action in the DI desk: Shree Cement, Kalyan Jewellers, and Sona BLW. All these three counters are seeing some buy flows coming in on the DI desk at lower levels. So keep an eye out for these counters as well.
Okay. Buy flows on DI desks at lower levels. I mean, they're sitting with cash to deploy, I suppose. Pankaj Murarka joining in this afternoon, CIO at Renaissance Investment Managers. Pankaj, thank you so much for taking out the time and speaking with us. Are you getting a TGIM feeling? Thank God it's Monday and tomorrow's a holiday. Whatever happens, at least, we can try to get some breathing room to deal with it. Is that the sentiment coming in? And what do you put down this mid-afternoon mild recovery to?
Well, clearly, I think, Tamanna, meaning it's very unsettling in terms of where things are playing out. But from whatever data and information that I am seeing, I don't think so that this conflict will sustain for a long period of time, given that in a very short period of time, US has been able to decapitate their leadership, including the supreme leader. Clearly shows that they have a very high upper hand. So I think my view is that I don't see this lasting for a longer period of time. More importantly, I've been saying this for a long while, that India, there are very few economies in the world like India, which are significantly insulated from external macro shocks. And we are at a point of time where all the four balance sheets, the Government of India's balance sheet, RBI balance sheet, banks balance sheet, and corporate balance sheet are very, very resilient. So I think India has the ability to deal with any external shock at all levels of the economy, very comfortably. The only spillover effect to India and to the global economy is going to be through oil prices. But I don't see a significant dislocation in oil production either. So I would still think that probably in the next few trading sessions, we should get over this, and probably the world will look much more normal. The geopolitical influence and impact of that is much deeper because it's a very significant event that has happened. But I think that will play out over a period of time. So I think, and also I must say, after a long time, I find a lot of pockets on a bottom-up stock picking basis where I find a lot of companies where valuations are reasonable or very attractive. So I firmly believe for a longer-term investor, given that the kind of fear that exists in market is throwing up a lot of value in the market. So it's time to probably invest selectively, go and buy into some of these names, take a 1 year, 2 year view and buy into some of these names.
Which ones? Like which ones? What is looking attractive right now with a longer term view? I mean, there's no choice right now, think about it, but to take a longer term view.
India has always been a great story from a longer term view, and long term investors have been extremely rewarding. So I think it makes economic sense to be a long term investor in India. India is a paradise for growth investors who've been invested for a longer period of time. The larger banks looks very attractive because they are in a great shape, and with cyclical recovery in credit and uptick in the economy, I think valuations are extremely attractive. So we own HDFC Bank and ICICI Bank, and we like them. So I think a correction is a great opportunity to buy into them. I find opportunities in some consumer names as well, and some of the beaten down IT names as well. So I think, and obviously there are stock specific mid and small cap companies as well. So I find a lot of opportunities now on a stock specific basis because we're coming out of a cycle where over the last 18 months, the index has been flat. We've had some earnings growth. More importantly, the earnings outlook going forward is much better than what it has been in the last 12 months. Trade headwind, India's, the penal trade, whatever duties that US has imposed, tariffs US had imposed on India was a big headwind on growth and on macro factors, including currency. All of that is behind us. So I certainly believe the next 12 months from a growth perspective, both for the economy and from an earnings growth perspective for India will be much better than what the last 12 or 18 months has been. And given the fact that markets, the large cap index, Nifty is flat and a lot of mid and small cap are down 20, 30, 40%, I find a lot of pockets of value in the market. So I think as the classical saying goes, one should be greedy when others are fearful and there's blood on the street. I see some of those signs here today at this point of time. So I think it's time to invest into this market and not run away from these markets.
Okay. So Pankaj, I'll just take that point forward. Where you're seeing value, how are you looking at a L&T very quickly? Because it's corrected more than 10% from the highs if you talk about the company. Now, with the exposure that they have in the Middle East, everyone's talking about the kind of impact it would see. But once things cool down, that's where the opportunity will lie for them as well. Then would you take this opportunity to start accumulating L&T?
I think L&T is a very reasonable investment even now. I know they have a very large operations across Middle East, and the fear is that could get impaired, and there could be some short-term impact on projects because of whatever is going around in Middle East and so on and so forth. But from a slightly more medium-term perspective, I think L&T is very well poised across all the growth investment sectors in India, across data centers, whatever is happening on the semiconductor side or on the power side. So I think, one should use this correction to buy into L&T if you, and a caveat, we are holders of the stock. So I think the reaction on the stock price is a bit overdone.
Yeah, in some sense, if you look at BHEL, by the way, that has not corrected at all today. In fact, was up about a little bit and currently to about 1%. And Pankaj, two questions for you. One is micro and one is macro. On the micro, the metal counters are exhibiting a lot of strength. Bottom up, we've seen individual plays like Sterlite Tech, Tejas Networks, etc. do very well on a rocky day like today as well. But are metals, because of the cycle that they are in, looking a good investment candidate, or is it too cyclical for your liking?
You're right, Neeraj. Metals have done phenomenally well over the last 18 months. There's been a whole trade around de-dollarization or the weakening of the dollar in the last 18 months. And consequently, we've seen a very sharp move in commodity prices, including metals, both largely non-ferrous and also in precious metals across gold, silver, and so on. And likewise, I think, but large part of gains are priced in. I am not in the camp of whole de-dollarization. I still think that dollar remains the prime currency for the world. And I think probably if at all anything, we are in for a stronger dollar going forward from here on. So I think probably it's not a bad idea. While there's underlying strength in commodity prices in these stocks, but for people who've been invested, it's not a bad idea to take some profits off the table. And I find more value in some of the other pockets of the markets, as I said.
I hear you. Pankaj, I have one more question. Today, two of your peer sets, we spoke to Sameer Arora in the morning, who said that he believed that 2026 will see the return of the FI money. Then we had Mark Matthews of Bank Julius Baer, who mentioned the same thing, that he believed 2026 because FIs will now start questioning the valuations of markets like Korea and some of the others. And India, because it's not performed and earnings growth will be strong, will come back. You do a lot of these global checks and meetings with global money managers too. Do you reckon people will be enthused to invest into India? Are your connects telling you that they want to start looking at India again?
I think so, Neeraj, because what has essentially happened is India is now globally labeled as recognized as a reverse AI trade. Last 18 months, all the capital flows into equity markets have singularly gone into AI companies or AI as a theme across semiconductors or the hyperscalers or companies or utilities which are supporting them and so on and so forth. But we are clearly seeing early signs of peak out in the AI rally in stocks across the whole AI basket across hyperscalers, semiconductors, and so on and so forth. Last week, Nvidia declared its results. The results were clearly blown out. They gave a guidance for the next quarter, which was far ahead of the upper end of the street estimate, and the stock was still down 10% because markets are clearly recognizing the fact that some of these companies might have a strong growth trajectory for the next 4 quarters, but clearly they see a slowdown coming beyond that. So we are clearly seeing a trend where money is being taken out of AI names because these stocks have done phenomenally well, and valuations from a medium-term perspective are very rich, and moving money going back into sustainable growth stories. And which is where I think India really comes into play. So India has had a biggest underperformance versus all the emerging market peers and versus the benchmark MSCI emerging market in the last 15 months. But I think all of that is I think that will reverse this year. And as the AI trade reverses, I certainly concur with some of the other guys that money will come back to India, because India is a more secular growth story versus a theme-based or a cyclical growth story for a period of time that has been driven by AI trade.
Okay, so we're talking about the AI trade. Pankaj is talking about how resilient India could be from here on and an investment destination as well. But thank you, Pankaj, so much for joining in. Always a pleasure to speak to you. But before we slip into a short break, let's quickly address the European markets as well, because if you see in terms of opening, it's a very interesting open with major cuts coming in that range of 1% on the FTSE. You have CAC and DAX, both of them are down nearly 1.75 to nearly 2%. And if you see in terms of the US futures as well, all trading under pressure from Dow, S&P to NASDAQ, with cuts of over 1% coming in there. We'll take this conversation forward as well as to what next for us. But let's quickly step into a short break. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The calls of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new water show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक concept नहीं है. This is my life. This is my story. One night, no repeats. Go get tickets now.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a
Alright, you're watching India market close, and there's of course pain in the market, some recovery but large pain. Now one of the reasons is what's happening in the Strait of Hormuz. Now you will be hearing people speaking unendingly about the Strait of Hormuz. We thought we'll show you real time what's going on right now. So this is a website which gives you satellite imagery of real time traffic in the seas, and you have to zoom out and look at what's happening here when it all kind of goes blank. Now this is that area, Hormuz. Bandar Abbas is one of the key Iranian ports, and this has been under a lot of firing and attacks as well. You can look at some traffic. All of these dots are actually vessels. Now if you zoom out, you will see that the traffic sort of just ends here. It just completely ends here. After this, there is no way for people to get out, and then you have maybe some of it recovering over here. Now this huge patch and this sort of traffic jam in the seas that you're seeing is where everything is stuck. The rest of the space gives you a sense of how this is more or less normal. But here is where things start getting stuck, and then you have open seas. Now this is what the problem is, and why is it? Because this is the only sea passage from the Persian Gulf to the open ocean. It's one of the most important choke points and a primary export route for Gulf producers. 20% of the world's daily oil consumption depends on it. The percentage is even higher when it comes to India, and it links the Persian Gulf to the Indian Ocean. Any blockade will drive oil prices up. And like I said, over 2/3 of India's oil imports pass through it. Now, technically, there is no blockade. The Iranian agencies have come and said, we haven't blocked it. But when it's so unsafe, no one's going to insure it. And we heard from Maersk. Maersk is one of the world's largest sea liners, and we heard from them. And they also talked about how, as a precaution, they have decided not to let anything pass over here because insurance has just gone through the roof. It's not become feasible. It does not remain feasible for Maersk or any other major liner to come in and actually move their ships through here. In fact, Maersk has said they're suspending all vessel crossings at the Strait of Hormuz until further notice. They've paused future trans-Suez sailings through the Bab el-Mandeb Strait as well, and they have rerouted around the Cape of Good Hope. Here's where it gets tricky, because obviously you're sailing for more time, the cost of transport becomes much, much higher. So this is where the pain now emerges, and you can real time see that no matter what anyone is saying, this part going blank is showing you that there is effectively a blockage at the Strait of Hormuz right now. Jyoti Gupta, research analyst at Nirmal Bang Institutional Equities Research, joining in for more on what we can see. And in fact, Jyoti tracks the defense sector. As we're speaking about the geopolitical impact, there's many aspects to it, Jyoti. There's freight, there's insurance, and of course there is defense. Now the thought is that defense spends will go up. From the Indian perspective, is there more scope in terms of valuations or upside for Indian defense stocks?
Good afternoon, Tamanna, and thank you so much for having me on the show. So, see, if you isolate this war from the general business as usual for the industry, I think the index is currently 10% off the peak. We believe that there could be selective buying interest, particularly in the defense stocks with exposure to missile systems, drone, anti-drone technologies, precision strikes, and surveillance capabilities. However, the sustainability of this buying momentum will largely depend on the longevity and intensity of the conflict. Now, if tensions escalate or persist, it could support continued investing interest in companies linked to missiles, UAVs, and advanced defense electronics. If the conflict de-escalates quickly, we may not see a significant or sustained wave of buying beyond short-term tactical trades. Additionally, we expect Q4 earnings results to play a key role in driving investor sentiment. Strong execution, order inflows, and export commentary in Q4 could provide a more durable trigger for the next leg of sector performance. So, if you ask me, is there a headroom for further growth? Yes, there is.
Okay. So, Jyoti, you're talking about, further opportunities that could lie for these Indian companies as well. Now, my question to you is, what happens in terms of execution? Because you talk about order books, but the key concern comes in when execution is delayed. Do you think Indian companies do have that bandwidth to execute at this level, so that they're able to actually convert this order book into revenues?
Of course. In fact, I would rather say that 20s, in fact, from 24 onwards, it's a takeoff stage, and FY27 would be the starting of the year where you'll see a lot of companies actually picking up pace of execution. So, as far as I know, the way the companies have scaled their production capacities over the last 1 year, in fact, 15 months, it's been is admirable. And I'm sure that the kind of orders that they're sitting in, current orders itself, which are quite large, they should be able to execute over a period of 3 to 5 years.
What are your top picks, Jyoti, in the defense pack? Because that really is the only space which has seen, some, I would say, spots of green.
So my topics have since the start of financial year FY26 has been HAL, BEML, data patterns, and solar. Now, if you see, data patterns has already touched our targeted price of 3,000. So I think we should. I think we could sell off and re-enter maybe at a better point, starting point for data patterns. But this company is exceptionally doing well in terms of the way it is IP driven. So I see a lot of potential for data patterns. HAL, of course, you've seen a lot of negative incidents happening and has actually brought down the stock. So actually, at this price point, I see HAL great, an entry point for HAL. In fact, people are concerned that whether execution would still be a concern. I think second half of FY27 would actually see much better, execution. In fact, the engines, while the company says 20 engines, I think 12 to 14 engines we should be able to receive. We should receive in the second half, and therefore execution should not be a concern going forward for HAL. And Q4, I'm a little optimistic that possibly the company would give a good numbers in the fourth quarter. BEML, of course, they will deliver some 9 trains by the end of this financial year. So we should expect some 4-5 train sets being delivered. And next year, I think the pace of execution should. Actually, it will pick up pace for BEML. So yeah, BEML overall I see doing very well. And solar, I think it is something which has been delivering consistently. So I think more of a stable scenario for solar. But BEL is one which is long-term compounder. I must say the way they are executing and the pace that they have, the stable pace that they have maintained for execution is remarkable. So this is another stock which I'm very positive on in terms of I mean, any entry point for Bell is a good point.
Okay, interesting names there in terms of topics, but thank you so much, Jyoti, for joining in. Always a pleasure to speak to you and get your views. And I think in multiple conversations, Tamanna, everyone has spoken about BEL as one of the topics when it comes to defense, when it comes to execution today as well. So I think that's going to be one of the counters that is seeing good amount of accumulation. But let's also get in Amit Goel. And we have Siddharth Khemka who are joining in. Welcome to the show, gentlemen. Always a pleasure to speak to both of you. Amit, my question at this hour is, with the kind of recovery that has come in terms of markets, one, any quick reason that you have as to what's leading to this recovery? And number two, what would your top picks be in terms of BTST, STBT? I know tomorrow is a holiday, but from a Wednesday trade perspective.
So my BTST would be to play Holi tomorrow and not carry any long or any short trades and enjoy the season. I mean, this is one festival that one should enjoy without a worry what is happening in the markets. So yeah, having said that, on a lighter note, see, if you look at the broad market and if you look at the history of war and conflicts versus equities, I have done a small study which I'll quickly give a summary. Anticipated and unanticipated conflicts have had very, very different and stark results. So anything which was anticipated, which was already in the news or sort of baked it into the price, and once the bomb has actually dropped, there is a phenomenon called, buy the bomb drop. So in my opinion, in my understanding, if the budget low holds, which is 24,587, if those levels hold, this is a good opportunity, good entry point for anybody who was waiting for a dip into the market. This is that dip. If this and the price action also kind of validates my point. So this anticipated conflict is an opportunity for the markets for investors to try and go long if the budget low holds. So this is the broad view on the markets. In terms of if somebody still wants to buy some stocks for BTST sort of a trade, MCX and Nalco are the two stocks which are on my radar. If you were to see the kind of price action on both, on Nalco specifically, technically speaking, it is a Morugozu candle, which is essentially open low and close high. So it is trading near the high of the day with positive gains of about 2.5%. with very strong volumes on the relative strength as well. So keeping a stop of about 341, one could look at targets of about 385, 390 and thereabouts. This is on Nalco. The final stock, which I feel is a good entry point, is MCX. I mean, with this uncertainty in the short term, one could expect increased volumes on the bourses of MCX on account of gold and silver, which gives us a good opportunity for us to enter MCX also. Even this is moving up strongly with about 2.5% gains and with strong relative volumes. So a stop of below 2,400 and a target of nearly 2,600 would be a call on the BTST.
Got it. Amit, very quickly, 30 seconds though. I heard you say it's a good time to try and go long. Are you going long or are you not?
Yeah, we are advising our clients to go long at this point.
At the current point of time. Okay, good to know that. So, well, this strength is being bought into. Amit Goel is actually saying that. Keep in mind, tomorrow is a holiday. The markets are on. So, be into the Nifty trades if you are not a too risk averse a trader. Siddharth, I wonder what is the dealing room or what is the view been at the dealing desks of Motilal Oswal? Have people largely been shying away from buying, or was there some frenzied buying at the lower levels because the markets have recovered really smartly in the last 40 odd minutes?
Yeah, hi, Neeraj, good afternoon. So I think if you look at our dealing room, there were nervousness in the morning when the market opened a little lower. I think there were interest from a lot of large clients asking for our top picks and any opportunities to buy on dips. But there was not any frenzy buying that we have seen. I think it has been just the start of the war and people are still cautious. We don't know how things will turn. And there has been a lot of interest, especially in the sectors that benefit out of this. For example, I think you have been discussing a lot about the defense space. That is where a lot of buying interest has been there. The upstream oil companies, I think ONGC, Oil India types companies there has been some interest there. I think barring that, we have also seen interest for some of our top picks, largely domestic names, domestic focused themes or sectors where people are looking to add gradually in this decline.
Okay, that's the point. How do markets deal with war? And unfortunately, this is not the last one. It's not the first one. It won't be the last one, possibly. I'm going across to Somit, who's put together this fantastic data on how every time there's been a war in the last decade, equity markets have responded.
So we have seen the data for the last 4 events that we have seen so far. Now, if you get the graphics, crude here is one factor where we have always seen an increase in the prices whenever there's a war type event. Libyan civil war back in 2011, crude prices increased by 25%. Iran nuclear sanctions, crude prices increased by 14%. Khorez attack that we had seen, that time also crude prices increased by around 15%, and when Russian invasion of Ukraine started, that time also crude increased by 32%. For all the other variables that we have seen, be it the Nifty, Indian rupee, FI flows and VIX, there have been divergent flows. But when it comes to crude, they have increased in all moments. Now, if you look at Nifty 50, the first 2 events, that is Libyan civil war and Iran nuclear sanction, Nifty was up around 6 to 7% in both the cases, and rupee also appreciated around 1.8 to 3.3% in both the situation. When the attack happened in one of the Aramco refineries back in 2019, Nifty had fallen around 1% for a brief period of time. Rupee had depreciated by around 0.9%, and when the Russian invasion of Ukraine started, Nifty had depreciated or had fallen by around 6% while Rupee had depreciated by around 3% during that period of time. Now, if you look at the FI flows and how the volatility index was, FI flows again in the first 2 events, there were buy flows, $6 billion of buy flow coming in when Iran nuclear sanction was imposed, $2.6 billion of inflow when Libyan civil war started. And when it comes to the volatility index, that was up 25% during the Iran nuclear sanction. There was when there was the Libyan civil war, that time we had seen a decline in the volatility index coming in by around 10%. But when the Khorez attack happened, that time we had seen a very minimal FI outflow, just $0.1 billion. But when the Russian invasion of Ukraine happened, that time the FI outflow was massive, around 6.4 billion. But that was not only because of the war event, there were also multiple other factors that led to this FI outflow during the Russian invasion of Ukraine. And when it comes to the volatility index, 6% uptick during the attack, and Russian invasion led to 16% uptick in the India volatility index. Now, we also went to the sectoral index performance similar to the benchmark. Major negative impact was seen only when the Russian invasion of Ukraine started. Consumer discretionary and financials dropped the most, while IT and utility were the only 2 indices that managed to stay in green during that time period.
IT and utilities. And, we were speaking this morning when Samir Arora said the AI threat is still the biggest one of all the threats that he's seeing. Siddharth Khemka, you said in the beginning of this conversation that you got calls from clients saying, what can we buy? What were you telling them?
So yeah, Tamanna, I think 2 factors. A, in the near term, we are looking at sectors which benefit from the war, as we said, the defense names and the upstream oil companies. But from a long-term perspective, what we are looking at is A, domestic themes that are not impacted by this geopolitical issues that we are seeing globally. And B, there is, rightly said by Samira, that there is a big threat of AI which has not gone away. And last week also we had seen market under pressure despite the war not being started. So there are certain sectors which are definitely benefiting out of the AI, which is where we are positioning for the next few years. So metals, we believe, because power demand is going through the roof, there will be a strong demand for copper, aluminium, and that is where supply will be a big challenge. And some of these companies which are fully integrated, I think that is where they will benefit. So copper-based industrial metals like copper and aluminium, that would be a key stock to look at from the next few years perspective. Power stocks, I think that will benefit a lot from this. And some of the domestic themes which are largely unaffected by AI, for example, you have the banking, financials, insurance, auto stocks, largely domestic focus and untouched by the AI names, I think, the AI theme. So these are sectors and stocks where we believe one should position from the next 2-3 years perspective.
Okay, so, interesting picks that you're giving in. In fact, Jefferies has also given their top picks in this kind of a market along with the Morgan Stanley. If you just quickly look at all the top picks coming in from Jefferies, again, the metal pack continues to be there. A lot of your energy names are there, your cement players, auto players, Bharti, Airtel, these are few of the names that Jefferies has. And on a Morgan Stanley, names like Trent and Lenskart are making it to their list. Varun Beverages as well, probably it's the summer. L&T at lower levels, Prestige, Adani Power, these are few of the other topics coming in terms of Morgan Stanley as well. But moving on, we're talking about the aviation disruptions as well that are deepening amid West Asian tensions. The kind of flight cancellations that we've been hearing about when it comes to Indigo, even for that matter, Akasa Air has extended its Middle East suspension. Let's get in Danish, to tell us more. Danish, a double whammy coming in for aviation companies. On one hand, it's a loss of revenues, and on the other hand, it's the escalation of costs on the back of higher jet fuel prices. What are you picking up?
Well, that's correct. We are seeing that the entire global aviation industry is impacted because of the airspace closure over key parts of the Middle East as well as certain other areas. So because of this, like you very rightly mentioned, that it is a big double whammy for the Indian Airlines, not only for the global airlines, but if we talk about the Indian Airlines specifically, on 1st March, we saw that in fact the ATF prices have also been increased by 5,000 rupees per kiloliter on an average. So much before the overall impact of the crude as a whole, we are seeing that already the ATF prices have started to go up. But as far as diversions are concerned, over the past 2-3 days, Indian Airlines have cancelled over 1,000 flights. And if we talk about a specific few airlines, for example, Indigo has not only cancelled its operations to and from the Middle East, but also on select key European routes like London and Istanbul. Similarly, Air India is also cancelling certain key European routes as well. So one of the reasons why this is being cancelled is the fact that because of the whole Russia-Ukraine crisis, already the airlines were using another route to go towards Europe, but even that is impacted because of the entire Middle East tensions that we are seeing. So due to this, we are seeing that it is a very huge impact for the airlines. And as far as passenger facilitation is concerned, airlines are doing whatever the best they can. They're trying to accommodate passengers in hotels, but it is a big impact for the Indian Airlines, because if we talk about India, Indigo and Air India, these two airlines have big, deep aspirations to become global carriers, but their global expansion is happening at that point in time when there is a lot of airspace closure. And let's not forget that the airspace closure between India and Pakistan is also there. So because of that, it is a huge challenge for the Indian Airlines. Over the next few days, it is expected that the flight cancellations are expected to continue. So it's a big problem for the entire global aviation industry.
Sure, absolutely it is. But we'll have to wait and see till what extent it's impacted. Now, as far as Indian tourism is concerned, maybe airlines, as well as look at what was happening with Ixigo, Yatra Online, some of those counters also taking a beating today, because a lot of Indians do travel in this region as well. Though some recovery now in an Ixigo. And Indigo, of course, seeing that pain. Yatra 10% down. I want to pull up a SpiceJet, the only other listed player, though we already saw Indigo about 6% down. Would you see any recovery, Amit, in any of these counters in your travel kind of space?
Hi, Tamanna. No, I would not, attempt doing any sort of a value pick in these counters. SpiceJet has its own set of problems, so this is something I would avoid with a barge pole. The other airline stocks or the travel stocks for the time being are showing a lot of depression. I would not venture any sort of a value buying here. Nothing on these stocks. I would stay away for the time being.
Amit, can you hear me? Yeah. What would you stick your neck out and buy?
No, is my voice going on?
Yes, I can hear you.
All right. Yeah, so no, I would not venture out and buy and be adventurous in this sector and theme, that is the airlines and the tourism stocks. Maybe some of the tourism stocks, maybe some of the hotel stocks which are domestic focused, but nothing which are outward looking. Especially not SpiceJet, because of the kind of, it has its own set of problems. So with the other global geopolitical tensions also, it is adding on to its problems. So I would not touch the airline stocks. I would not touch the ticketing stocks, but maybe some of the hotel stocks could, be a value pick in this entire theme.
Any favorites?
No favorites. In fact, this is not a sector that I'm really very bullish on.
What I'm getting from you, Amit, is that you don't want to buy anything right now. You're saying, "Mujhe Holi khelne do." Why is she asking?
Holi khelne do? Yeah, but I would, if you were to ask me about IT or about pharma, those are the places where I am looking to buy.
Name one pick for Wednesday.
I've already mentioned MCX and Nalco from the BTST space. Okay. So coming back to Nalco is something which has shown very strong momentum today. Morubozu candle closing near the day's high, relatively strong volumes. So this is my pick of the day. This is something where I would look to make some benefits.
Okay, thank you so much, Amit. Thank you so much, Siddharth. Have a great Holi. Say Holi hai, bura na mano Holi hai. Well, maybe that's what the markets are telling us as well. Don't feel too bad, we'll recover. Let's pull up where we're closing on the Nifty. Okay, 1.5%, nearly 330 points. 24,900 was lost in the carnage today. Some would say 1.5% is not too bad, considering that the hostilities have actually expanded. Iran has ended up bombing in some way or the other 7 sovereign nations. So considering all of that, maybe 1.5%, not too bad. The advanced decline ratio, though, showing you the bearish mood on the markets. Let's pull up the Nifty heat map as we see the closing bell details coming in. It's pretty much the same. Bharat Electronics is the only winner. Defense stock obviously takes it away. You're seeing metals doing okay as well. Sun Pharma, because pharmaceuticals always a safe space. ONGC, because of crude prices, even that has actually come off from where it started off the day. On the losing side, Indigo, double whammy, right? Your crude prices, which is a major input, gets more expensive, and on the other hand you have to cancel a bunch of flights because of what's happening. Larsen & Toubro, Macquarie note outlines very clearly what the hit is to Larsen & Toubro, because they have been expanding rapidly in this region and you're seeing that pain throughout. This is a tough market. Nifty contributors will give you a clearer picture as well on how markets have been pulled down massively by Larsen & Toubro, Reliance and HDFC Bank. HDFC Bank has actually recovered from its lows. BEL, Hindalco and Sun Pharma on that other side. Broader markets also seeing the pain, the mid cap and the small cap coming in, you're seeing broader markets not really doing too well either. So the mid cap nearly 2% down and the small cap index also nearly 2% down. The BSE 500 will also show you a picture of largely losers. Of course, there's some winners to talk about. Sterlite, Tejas seem to be, like I said, in some alternate universe of their own, and Muthoot Finance as well. Easy Trip, Reddington, Birla Corp, some of the top losers.
And I think the key over here was, Tamanna, everyone was of the opinion that in spite of the weakness, the correction that we are seeing in the markets, this would be an opportunity to buy. So don't be very sad. It is Holi and it is going to be time for us to celebrate as well. So I think all the viewers, Burana Maro, Holi hai, and try making your profits also pretty well in trade.
You have to return the favor. So I suppose all said and done, we have to find a way to celebrate even in tough times for the markets. Maybe the color we come back with on Wednesday should be green.
Green, yes, it should be green. Right now we've reused orange, which is still very neutral, but hopefully we come back with the green on Wednesday with things cooling off, and I think that's going to be something we should be watching out for. But coverage in terms of the war situation, the tensions, the impact not only from a markets perspective but even from a humanitarian perspective is something that will continue.
Continues. But thank you so much for watching India Market Close, and a happy Holi to all of you.
Year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सेप्ट नहीं है. This is my life. This is my story. One night, no repeats. Go get tickets now.
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
The expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most
watching Market Express with me, Shriyanti Singh, and this is the show that's going to get you a snapshot of everything that is happening right now, be it headlines or what's happening with the top buzzers of today. But let's first talk about markets in terms of West Asia tremors that were felt on the Lal Street today as benchmarks saw sharp cuts in trade amid heightened volatility. Nifty found crucial support. When you talk about that 25,600 level to bounce back from lows to end near 25,900 as well. When you talk about Sensex, that's also tanked over 1,000 points, while broader markets also saw deep cuts coming in. India VIX also saw a strong move as the volatile index hit the highest level since June 2025. Let's also talk to you about the sectoral picture then. That was largely a weak day of trade that you're looking at. You do have war volatility that is really driving your headlines and the markets right now, impacting the key sectors as well. So travel stocks were the biggest drag, followed by oil marketing companies, which were under pressure as well on the back of elevated crude prices, which we will be talking about in just a bit. But on the winning side, on the flip side, you did have defense stocks that outperformed in a rather weak market amid war sentiment. And speaking of the war then, explosive developments across West Asia as the Iran-Israel conflict widens sharply. The IDF has released new videos of strikes on targets inside Lebanon, underscoring that particular expanding front as well when you talk about Israel. Meanwhile, in the Gulf, you do have Bahrain that has reported a massive explosion, and that is moments after authorities confirmed a ballistic missile attack launched by Iran. Now, across the region, what you're looking at right now is a shockwave that is really continuing with blasts lighting up Dubai and Doha as well, signaling just how rapidly this particular war right now is spilling across borders as Tehran's retaliation intensifies and US-Israeli operations as well continue. The Middle East now finds itself in one of its most volatile moments in decades, and the commentary coming in from leaders is very clear in that there is not going to be any resolution to this conflict anytime soon. Let's also talk to you about aviation disruptions back home then that are deepening amid this particular tension as well, this particular conflict that we're talking about. Indigo has cancelled about 162 flights, suspending all services. and to and from the region that I'm talking about till noon, including London, Heathrow, and Istanbul and Manchester as well. When you talk about Akasa Air, that has extended its Middle East suspension as well till March 3rd, and SpiceJet that has also extended flight cancellations till 3rd of March. Let's also talk to you about West Asia's skies remaining thick with the dark clouds of widening war as well, because you do have Israel-US strikes and Iran's sweeping retaliation continue to redraw the region's fault lines. And today, you do have Tehran's first forceful political response since the killing of its supreme leader. Senior Iranian statesman Ali Larijani emerged as the face of defiance, and speaking to state media, in fact, he's delivered a chilling warning, calling the assassination an assault on the nation's very soul. They stabbed the heart of the nation, and I quote him here, their heart is going to be stabbed to, end quote. This is the pledge coming in from him. And he's also signaled that Iran's counter-strikes across Kuwait, Bahrain and Qatar were only the beginning at this point in time, dismissing reports that Tehran sought talks with Washington. Larijani, in fact, declared bluntly that Iran will not be negotiating with the United States under fire, raising fears that this conflict, already regional in scale, could veer into an even more dangerous phase. Let's also talk to you about who's named as the interim successor at this point in time, because you do have Iran that has named Ali Reza Arafi as the interim successor to long-time Supreme Leader Ali Khamenei. And when you talk about Ali Reza Arafi, he's been named to an interim leadership council that includes the president and head of the judiciary to be at the helm of the country until a new permanent leader is selected. It came after the United States and Israel claimed to have killed Khamenei in a wave of strikes on Saturday against targets in Iran, which sparked swift retaliation, of course, by the Islamic Republic. Let's also talk to you about a historic power vacuum after the killing of Supreme Leader. When you talk about Iran, attention is now fixed on a handful of men who could shape the country's future at this point in time. So at the top of that list is Mujtaba Khamenei, the Supreme Leader's 56-year-old son, a behind-the-scenes power broker with deep ties to the IRGC, but lacking senior clerical rank and facing strong resistance as well to a father-to-son succession. Now, another contender that you're talking about that we just mentioned, Ali Reza Arafi, you're talking about the head of Iran's seminary system and former Guardian Council as well. You are talking about a respected figure in terms of his administrative skills, but not considered a political heavyweight at this point in time within the security establishment, of course, and also in the mix is Mohammad Mehdi Mira Bagheri as well, a hardline cleric. You're talking about him who was in his early 60s, known for ultra-conservative views and deep opposition to the West, and Hassan Khomeini, the grandson of the Islamic Republic's founder, carrying revolutionary legacy but little political influence and previously barred from high office as well. Back in 2016, as the Assembly of Experts deliberates behind closed doors, you do have Iran entering a period of uncertainty with the balance of power between clerics and the IRGC likely to decide the country's next supreme leader. Let's also talk to you about a major escalation of the regional conflict then. Saudi Aramco has shut down its Ras Tanura refinery after the facility was hit by a drone. Now, a little bit of background for our viewers when you talk about this particular refinery. It's one of the largest refineries in the Middle East with a capacity of 550,000 barrels per day. The bottom line is, built in 1945, Ras Tanura is not just an industrial complex. It is the heart of Aramco's export system, a real-time barometer for global oil flows, and one of the most strategically critical energy assets anywhere in the world, the largest in what the West calls the Middle East and what we call West Asia. Let's also talk to you about an important update pouring in right now. IRGC claims to target Netanyahu's office. Fate of Israeli Prime Minister is currently unclear, and that is the commentary coming in from IRGC. IRGC is also claiming to target Israel Air Force commander, and those are some very important developments that we're looking at unfolding right now. We'll keep getting you some more details when it comes to this one, but for now, what is clear is that there's a claim being made by the IRGC in terms of targeting Netanyahu's office, and the fate
is something that we'll be getting you some more details on as and when they unfold, but that's the latest coming in. Let's also talk to you about PM Modi saying that the situation in West Asia is deeply worrying and India firmly stands for peace and stability. Speaking alongside visiting leaders, he's also stressed that all conflicts must be resolved through dialogue and diplomacy, not escalation. Now, the Prime Minister has also said that the government is closely tracking developments and working with countries in the region to ensure the safety of Indian nationals. And that's some key commentary coming in as far as the Prime Minister is concerned. Let's also get you an update when you talk about prices. Take a look at oil first, because oil markets are in full-blown turmoil, with crude posting its biggest surge in the last 4 years as traders assess the fallout from the effective closure of the Strait of Hormuz. Now you're talking about the world's oil artery as well. The narrow corridor that moves nearly 20% of the world's oil is the Strait of Hormuz for you. The Brent crude, that's rallied as much as 13% to its highest level since January 2025. Later paired some of these gains, but still trades more than 9% higher on the day. The spike comes as OPEC Plus agrees to raise output quotas by roughly somewhere close to 206,000 to 260,000 barrels a day next month. And this is a move that was slightly faster than expected when you talk about the pace as well, though spare capacity remains confined to Saudi Arabia and the UAE, limiting how much the cartel can offset disruptions. Quick check on the disruptions that I'm talking about as well. More than 40 supertankers carrying millions of barrels are idling inside the Gulf as insurers pull war risk coverage, underscoring just how fragile global energy flows have become as conflict escalates. Let's also talk to you about global shipping giant Maersk that has halted all vessel crossings through the Strait of Hormuz indefinitely as security concerns escalate across the Gulf. The company has also paused trans-Suez sailings via a key route, and you do have them rerouting key services including ME11, MECL as well around the longer Cape of Good Hope, while cargo acceptance at this point in time for the West Asian area remains open. You do have this particular shipping company warning of delays and schedule changes at Arabian Gulf ports, and they're also saying that crew and cargo safety is paramount at this point in time. It will resume normal routes only when conditions allow. And even as markets stumble, global brokerages stay confident on India. Jefferies remains overweight on 22 stocks backing leaders. So you're talking about HDFC Bank here, Axis Bank, SBI, Bharti, Airtel. Those are some of the counters that make it to their radar. The brokerage also sees strength in industrial and energy names. So you're talking about JSW Steel here. Something like an Ultratech Cement, Coal India as well makes it to their radar. And alongside, you do have Morgan Stanley. The message is in fact clear. Use the dip to focus on quality, not panic. Let's keep it going with brokerages. Morgan Stanley also remains firmly overweight on India. The brokerage flags 10 high conviction names on its focus list, cutting across autos, retail, banking and infrastructure. From consumption plays to core industrials, the message is quite clear right now. Quality leaders remain the preferred bet even in volatile markets. Let's also talk to you about UBS initiating coverage when it comes to Grow with a neutral rating, and a target price of 185 rupees is what you're looking at here. The brokerage calls Grow a compelling platform and India's largest retail investing APP, but just that the current valuations, when you zoom in on those, they limit near-term upside as well. And they are also expecting non-broking revenue streams to power the next phase of growth really, while operating leverage could steadily lift margins. Moving on then, Adani Enterprises steps up its defense push. Its arm, Adani Defense and Aerospace, is going to be acquiring a 14.2% stake when it comes to Airworks India Engineering. Now, the company has also signed a business transfer agreement with Punch Lloyd to also acquire its defense unit at Malanpur. And this particular move, when you talk about this one, it's strengthening Adani's presence in aerospace and defense manufacturing as well. Let's also talk to you about Rain Industries, that has posted a sharp year-on-year profit improvement in the third quarter, even as sequential numbers soften. When you talk about their consolidated revenue, in fact, you're looking at a rise of about 17% thereabout to somewhere close to 4,300 crore, with EBITDA more than doubling as well to about 504 crores. Margins expanding nearly 5 percentage points. The advanced material segment struggling with the EBITDA down about 60% due to seasonal softness and higher labor costs as well, while cement volumes are affected by extended monsoon in South India. Let's also talk to you about Tejas Networks that has rallied 55% in just 3 sessions after 6 months of underperformance this one. Now, even though it remains down nearly 50% from its 52-week high as well, this is a surge that you're looking at that follows a strategic 5G deal with Japan's Corporation as well. And strong trading volumes is what you're looking at when you talk about Tejas Networks. Incentives under India's PLI scheme backed by Tata's Panaton Finvest as well. The company is aiming for global 5G contracts while also managing inventory and execution risks. Let's also talk about the shares of Fino Payments that fell sharply in trade after MD and CEO Rishi Gupta is arrested under the CGST and SGST Acts as well. The panic eases after the bank clarifies that the probe relates to certain program managers, not the bank's own compliance. Now, a quick board response and management, in fact, that really helps steady sentiment, but it was quite a fall that you were looking at when it comes to this particular counter. Let's also talk to you about Mahindra Group that is rationalizing its global portfolio at this point in time. The company is exiting its agri-machinery business in Japan as part of a sharper capital allocation strategy. Mahindra will step away from Mitsubishi Mahindra Agricultural Machinery and plans to cease operations by the first half of financial year 27. The group says that the move reflects a disciplined approach to long-term value with a structured transition and continued support when you talk about its customers in Japan. Let's also talk to you about Bharti Airtel that is signaling growth and shareholder focus at its investor meet. The company is planning to steadily increase dividends and invest heavily in data centers, targeting over 1 gigawatt capacity. It also aims to scale up its financial services business to reach millions of subscribers while keeping strategic control of its Africa operations. Now, when you talk about Airtel, they're expecting average revenue per user or ARPU to rise and says that competition remains limited given the steady sector growth at this point in time. Let's also get to the brokerage verdict when you talk about Bharti Airtel. Citi is maintaining a buy rating when you talk about this counter with a target price of about 2,380 rupees. In fact, the brokerage is saying that the chairman's strategic vision is making Airtel a compelling long-term story, while near-term catalysts when you talk about this one are going to be limited due to tariff uncertainties. The stock's recent underperformance offers an attractive buying opportunity at this point in time. Positive implications are also expected for Indus Towers. Let's also talk to you about some more brokerage notes pouring in when you talk about today. JP Morgan is staying bullish when it comes to Dixon Technologies, even as the stock has slid over the past months. Now, the bank maintains its strong outlook and targets, saying that uncertainty around the mobile PLI 2.0 is not a major worry anymore, and much of the risk is in fact already baked into the buy priced in. It also sees potential upside if the PLI support is extended or refocused on local component manufacturing and exports. Let's also talk to you about Hindalco Industries that is facing margin pressure as the used beverage scrap prices in fact jumped nearly 20%. Prices moved to around $2,586 a ton from somewhere close to $2,100, squeezing margins to $500 per ton from the previously $670. Now, notably, you do have Novelis, Hindalco's key unit that uses over 60% of recycled aluminium in its production, making it sensitive to scrap price swings. Let's also talk to you about DGTR launching a countervailing duty probe into PVC suspension resin imports from China after complaints by domestic manufacturers. The investigation alleges Chinese exporters benefit from government subsidies, potentially leading to retrospective duties. Now, India imports over half its PVC resin from Beijing, and domestic PVC prices, when you talk about them as well, they bottomed somewhere close to December 2025, having rebounded and are expected to remain firm from here on, offering a positive outlook as well when it comes to local plastics pipe makers. Let's talk to you about the two-wheeler sales in the month of February, showing strong momentum with major players reporting strong growth as well. Now, Hero MotoCorp leading with just that nearly 44% growth coming in. TVS Motor Company posting over 30% growth. iShaw also contributing with heavy double-digit gains as well, reflecting strong consumer demand across the segment. Let's also talk to you about some more details that are pouring in right now, because you do have a bunch of updates that are pouring in terms of the headlines when you talk about Iran as well. But when you talk about the PVs, when you keep going with Motown as well, you're looking at passenger vehicle sales also maintaining a healthy growth trajectory in the month of February. Maruti Suzuki growing about 7%, Tata Motors and Mahindra posting gains of about 35% and 19% respectively. Hyundai, when you talk about this one, also seeing steady growth, highlighting a broad-based recovery across private vehicles. Let's also talk to you about commercial vehicle sales that are maintaining a robust growth in the month of February, reflecting post-GST rate cut momentum. Tata Motors on gear, while VECV as well is posting somewhere close to 23% growth as well. The data suggesting sustained demand in freight and logistics segments when you're reading the fine print. Onto the primary markets then. CleanMax Enviro Energy Solutions made a weak debut, listing at a roughly 10% discount to the IPO price. The stock opened at around 960 rupees, and that's on the NSE, and 952 rupees on the BSE, compared with the issue price of somewhere close to 1000 rupees per share, meaning that initial investors faced an immediate notional loss that you're looking at, and the IPO itself, when you talk about that as well, so muted subscription with particularly weak retail interest. The listing suggests that investors are turning more valuation sensitive.